हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पी-मार्क मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Welcome back. You're watching Ask Profit, the afternoon edition here at NDTV Profit, and this is a show that gets all your stock-related queries answered. I'm Mahima Vachharani, and with me is Puneet Zaveri. And while you start sending us all your stock-related questions, let's take a quick look as to how the markets are doing. The Nifty 50 is holding above the 24,400 levels, up by about 0.6%, slightly off from the day's high point, but we're seeing an uptick of almost 140 points on the Nifty 50. We'll have to see whether this levels of 24,400 are sustained or not by the end of this day. The Nifty 50 is also trading above the 58,300 levels. The Bank Nifty is also trading above the 58,300 levels. Well above the 0.75% mark and almost at its day's high point as well. With regards to where the Nifty 50 heat map goes, let's try to pull that up and see as to what are the counters that are buzzing in trade today. You have HDFC Bank on the back of its business update coming in, up 3.6%. Hindalco for a change is in green today, up 2.7%. ONGC also doing fairly well, up 2.4%. But on the flip side, you have Kotak Mahindra Bank, as we've been talking about the tale of two banks, is down by about 3.9% on the back of a weak Q4 business update. TCS now seeing profit booking today, down 1.9%, and Max Health also seeing a downtick for around 1.4%. Let's quickly pull up the advanced decline ratio to see as to what that ratio is indicating as to how the broader end of spectrum is doing, though underperforming the benchmarks, and that's reflective in the ratio as well. You have more declines as compared to the advances. The mid cap 150 is down by about it's up by about 0.2%, and the small cap 250 is up by about 0.2% as well. So that's with regards to where the markets go. But let me welcome in our guest for the day. We're joined by Neerav Asher, Head Equity Research Analyst at Latin Manharlal Securities. Securities, and we'll soon also be, we also have Vishnukant Upadhyay, AVP Research at Master Capital Services, joining us now. Welcome to both of you, gentlemen, and a very good afternoon to the both of you. I'll start by taking the first question, which is coming in on Godrej Consumer, and this is on the back of its Q1 business update. Our viewer wants to know whether to continue to hold this one or not. The buying price is not mentioned, but Nirav, overall consumption business updates are looking strong. Any particular pocket that you're eyeing, and especially a view on Godrej Consumer?
Good afternoon, and thank you for the invite. We've had some very encouraging updates coming in, quarterly updates coming in from the three FMCG companies which have declared their quarterly numbers. And I think Dabur has been very explicitly, they have stated that the rural growth has outpaced the urban growth. Both the rural and the urban sectors continue to perform quite well. Marico is also talking about a fall in the copra prices, and they are talking about a very strong growth potential ahead. And so is the case with Godrej Consumer Products. They're talking about stable demand. Overall, the consumption space is looking quite healthy, with jewelry makers also expected to throw in some very good numbers. I think we are seeing good traction in Titan. We are seeing good traction in Kalyan Jewelers and the rest of the pack. And I think Trent is also showing a lot of promise and potential. So I think the entire consumption space seems to be buzzing quite well in Trent.
Got that view, Nirav, and welcome to the show. The next question now coming in. This one's on RPG Life Sciences. Our viewer Raja from Chennai is holding these shares at 1985 rupees per share. He wants to know if he should continue to hold his 40 shares at this point of time. Vishnu, very good afternoon. Thanks so much for joining in. What would you recommend Raja to do? He's sitting in good gains right now. Should he continue to hold?
Hi Puneet, a very good afternoon. Definitely, stock is showing a sign of a bullish reversal, and we have seen prices taking U-turn from the proximity of 200-day exponential moving average. And the way prices are behaving from the lower levels, every decline in the prices is being beautifully seen as an opportunity to create a fresh long position. So I believe as long as stock is trading above 2300 sort of levels, on the higher side 2600, 2700 can't be ruled out. So yes, one can hold this.
Got that view. The next one coming in now, and this one continues to be on Engineers India. Murli, who's a regular viewer of the show from Hyderabad, is holding these shares at 119 rupees per share. So he's effectively doubled his money at this point of time. Nirav asking if there is any more upside left at this point of time, or should he book out his profit? What would you recommend?
I think he should continue to hold. If possible, he can even average at the current levels because of the strong prospects in the oil and gas segment, where EIL is quite strong. And they have also set up their offices in the Middle Eastern region, where I think now with the ceasefire in place, there could be possibility of more orders going forward. So I think he should continue to hold.
Got it. Well, another question coming in now, and this one's on Sterling & Wilson Solar. Our viewer Shankar, who's from Bengaluru, has bought these shares at 223. Currently in the gain, since he's holding 300 shares, asking if he can buy more or sell out, book out this gain that he's on. Vishnu, would you recommend that?
Yeah, definitely. He can average, or he can buy more discounted at a current juncture. The stock has given a clear-cut breakout from the inverse head and shoulder pattern and currently decisively trading above the neckline resistance. So I believe on the higher side, stock should approach towards 300 and 320 sort of levels. So it is currently consolidating in a very thin horizontal band of 254 and 240. So it is giving an early sign of breakout on the higher side.
Got that view. Another one that's coming in, and Nirav, this one's for you. Our viewer is holding these shares. This is Aniket Desai from Pune. He's telling us that he had bought Cupid at 44.96, and he had called in, asked your view. You had asked him to hold at that time. Stocks continue to do well, so he's in gains because of you at this point of time. Would you recommend, Nirav, that he should continue holding still, or is it a good time to take some gains off?
No, I think he should continue to hold. Keep the faith.
Keep the faith. Okay. And is there any targets that you're looking out for at this point of time?
Well, I think we could move into a new trajectory altogether as the prospects improve. So I think he should not look at any specific target, but I think the stock could be a doubler in the times to come.
Even from these current levels, Nirav?
Yes. Yes.
Well, most certainly very bullish commentary coming in from Nirav at this point of time on Cupid. Let's look at the 1 year chart, also the longer term chart, and because it's been a very stellar move one way on the upside. There's been some bouts of pressure. Of course, this is showing you that demerger, that the split also that doesn't take place, but it's been a very stellar move on Cupid at this point of time. The next question coming in now, and this one's on GE Shipping. Our viewer Venkat is holding 70 shares at 15.20. Wants to know if he should continue to hold this counter right now. Vishnu, what's your view?
Well, Manish, so the stock is trading in a very tight horizontal band, 1530 on the higher side, while 1360 on the lower side. The stock is a completely range bound. Texture is slightly positive. So I believe as long as the stock is holding 1340 sort of levels, so yes, one can hold or one can even buy the stock because risk reward is in favor. On the lower side, put a stop loss below 1340, while on the higher side, first target 1530, which if broken decisively, 1600 will be second target.
Okay, all right. The next one that we have is coming in, and this is on Coal India. I think Shad from Tirupati is writing in and asking whether he can continue to hold the 50 shares that he has bought at the levels of 386. Vishnukant, what would you recommend on the charts?
Well, so stock is currently trading in the proximity of 200-day exponential moving average that aligns somewhere 428. So risk reward is in favor. Yes, one can hold the counter, but do not forget to maintain the stop loss below 428.
428, got that view, Vishnu. But the next one that's coming in, it's on Uno Minda. Venkat Ramani from Bengaluru wants to know if it's a good counter to enter at this point of time for the next 1 year. Nirav, this one has been consolidating at that 1100 odd mark for a while, right? And not the cheapest in that auto component space. The quality definitely there. Would you recommend a buy at this point of time?
Well, I think a few of these auto ancillary stocks are looking quite pricey at the moment. So I think my choice would be tilted towards Precall. I think that is looking pretty exciting from a growth perspective and a medium-term perspective.
Yeah, the next one that we have is on KPIT Tech. Dr. Kishore from Andhra, his buying price is 940. He's holding around 40 odd shares. Wants to know whether to average, to hold or sell. What would you recommend, Vishnukant?
Technically, the stock is looking quite bearish, so I would not recommend to even hold or buy the stock. So if you find any higher level somewhere around 600, 620, try to get exit from the counter.
And that 1% revenue downtake expectation Q1, and that update just took all this thing out of KPIT and the moves this week as well. Let's look at this month's chart if we can, or a near-term chart as well. That 15% downtake on one day when the company came out with that update has definitely taken the sting out, down 28% for the month, and you see that straight curveball down the road. But next one coming in, and this one's from Satyan. Exide is one counter that he's looking at since it started to see an up move at this point of time. He wants to know if Amar Raja is also one of those counters that he should look at because Nirav, he sold out of Exide and bought into Amar Raja at 1050. Would you recommend him to continue holding because the new capex on the lithium ion side is quite detailed and will be some more time to come, right?
Well, I think it's going to be going to be a long waiting period because Amar Raja is currently in a capex mode, and it's a pretty heavy capex. So it will take some time for the returns to start trickling in. So I think he should continue to hold.
Next one that we have is on Vedanta Power. Nageshwara Rao from Hyderabad is holding around 12,500 shares at the levels of 42. Wants to know if you can continue to hold this for a year or so. Nirav, any view on this one? And in fact, a combined view on all of these demerged entities and any one of these in specific that you like?
Well, the beauty of all these demerged entities is that all these companies have a base which is already there in place. And when you have a very strong base, you tend to build very strongly above that. So I think this is a very good opportunity to look at stocks like Vedanta Iron and Steel, Vedanta Power, and Vedanta Oil and Gas, which have strong potential to grow into something big in the near future.
Got that view. The next question coming in, and this one's from Harish from Bengaluru. On Aptus Housing, so he's bought these shares at 270, not mentioned the time frame, but Vishnu, would you recommend him to continue holding? What do the charts suggest?
Yes, definitely. Their stock is, showing some resilience here, and the stock is also forming the inverse head and shoulder kind of pattern. But still, the stock is trading below the neckline resistance. But the way prices are, gathering momentum from the lower side, I believe the invalidation will take place in days to come. So on the higher side, I believe 320, 340 sort of level should be on card, while on the lower side, stock should not fall below 272 to maintain its recently emerged a buying journey. So with keeping the stop loss below 272, on the higher side 340, one can buy.
All right, okay. The next one that we have is coming in, and this is on Hitachi Energy. Kapoor from Lucknow wants to know whether he can continue to hold this counter or not. Let's try to pull the chart up and see as to what it's doing right now. It's up 4% today, but his buying price is quite high. Nirav, his buying price is around 35,490. He wants to know as to what should be the next course of action for him. What would you suggest?
Irrespective of the buying price, I think he should continue to hold.
All right, okay. The next one that we have then is on NLC. GS Arun from Hyderabad is holding around 112 odd shares at the levels of 311. He wants to know whether he can continue to hold this and what could be the target coming on this one. Vishnukant, any view on the charts for NLC?
Well, the stock is showing some, pressure from the higher levels. But the good thing is that the stock is still trading up. It's a crucial horizontal support that aligns somewhere 304, 305. So, but stock is definitely, facing pressure from the higher levels and also fell below the short-term key moving averages. So, I would say maintain the stop loss below 304 as long as prices are above this level. Maintain. If a stock falls below that level, 304, get exit from the company.
The next one is coming in from Vishwanajan from Chennai, and he wanted a short-term view on CG Power at this point of time. Vishnu, actually, in terms of valuations, and Nirav highlighted a little bit, while not a direct peer, we've seen CG Power, Hitachi, GE Vernova, T&D, all those counters actually get impacted on Friday. Today have seen a recovery. Is that sustained momentum back on all of these clutch of counters and for CG Power too?
Well, Puneet, so the stock, the chart is looking a little dicey. In fact, after witnessing such huge fall on Friday, the stock is up now around 3.5%, but it's still getting below the short-term key moving averages. So I would say if prices, again revise the, Friday's low, that is 887, then definitely there will be some sort of pressure in the counter. And in that case, on the lower side, 808, 810 will be on card. So with keeping stop loss below 880, one can hold the position.
Okay, all right. The next one that we have is on BEL. This is from Mr. Rao, who's writing us from Vijayawada. He's holding around 10,000 odd shares at the levels of 453. He wants to know whether he can continue to hold this for the next 6 months or should he exit. Vishnukant, what would you recommend on BEL?
Yes, definitely. One can hold the position. On the lower side, maintain the stop loss below 410, while on the higher side, I'm expecting 460, 470 will be on card.
And the time frame, Vishnukant, because he's also sitting on deep losses since he has a lot of shares as well, or more than 10,000 at this point of time. So what is the time frame for that 460 rupee price target?
It's around two months we can set target.
Got it. Next one that's coming in terms of a stock related query, and this one's from Prashant, who's from Bengaluru. He wants to know about ITC, Nirav. In the FMCG space, is it a good long-term bet? I mean, FY27 most likely, Nirav, according to both consensus estimates, seems to be a year where the EPS will fall. Valuations on a 28 basis also looks very lucrative. But is it a good buy at this point of time within that space?
Well, there are better bets in the FMCG space. So I think why not have a look at something like a Nestle, or something like a Marico or a Dabur. So I think that there are better options.
Okay, all right. So that's the view coming in on the FMCG space. The next one that we have is on LIC. Our viewer Sampath Kumar from Tamil Nadu is holding around 50 odd shares at the levels of 425. He wants to know whether he can hold or exit. What's the view like, Vishnukant, on the charts?
See, again, it's a completely range-bound counter and trading below it's a crucial horizontal resistance. That's 450. But yes, stock is currently trading above the all key moving averages. So I believe as long as prices are above 420, one can hold the position. But definitely try to get exit from the proximity of 450.
Got that view. So LIC, of course, our colleague Shrimi also broke a very important story today that the government could be looking at reducing the stake in LIC by at least 1.5 to 2%. A very developing story also, because that's been driving the pressure on the counter all this while as well. But viewers as well as Vishnu and Nirav, it's now time for the rapid fire round in this edition of the show. You both know the drill. First question, it's on REC. Srinivasa Rao wants to know, as the company's merger with PFC is on the cards, should he continue to hold his REC shares? Would you recommend that, Nirav?
Hold.
The next one is on Varun Beverages. Ashish from Delhi wants to know if this is a good time to enter into this counter. He's looking at a long-term view of 1 year plus. Nirav?
No, not advisable.
Marine electricals, Vishnu on the charts is not something that we've discussed too often, but Mohan from Coimbatore wants to enter this counter at the current level. Would you recommend that?
1 second. Yes, definitely. The stock is showing strength on a chart. One can enter.
Natco Pharma is the next one. Mr. Reddy from Bengaluru is holding 38 shares at the levels of 889. He says that he can hold this for the next 3 years. Is it a good hold, Nirav?
Yes.
Epigral bought by a viewer at 1136, so currently sitting on a loss, and that's Sashant. He wants to know, Nirav, if he should still continue to hold Epigral at this point of time.
Advisable to wait for the next quarterly results and then take a call.
Okay, NTPC Green is the next one. Is it a good time to average is what Sriram from Chennai wants to know. Vishnukant, on the charts?
No, not basically. Not looking good on the chart.
Got it. Tabakti from Hyderabad is holding on to Gillette at 7680. Vishnukant bought this very recently. Should she continue to hold the 200 shares?
Yes, definitely. From the better risk point of the view, one can hold maintain stop loss below 7500.
City Union Bank, is it a good time to enter this one? Vishnukant, on the charts, what do you think?
Yes, definitely. Stock is looking quite good.
The next one coming in, and this one's on BSC. Sampath Kumar wants to know if it's a good time to invest right now. Nirav, on the valuations, of course, pricey, but what's your view?
Wait for the quarterly results and then decide.
Okay, Sangvi Movers is the other one. Our viewer has bought it at the levels of 353. Continue to hold. The momentum is strong, Vishnukant, or exit?
1 second. 1 second.
Sangvi Movers is the call.
In fact,
go ahead.
In fact, I am not able to find stock on the graph.
I'm saying Sangvi Movers is the counter. If we can try to pull that up, I'll try to pull up the ticker for the same. It is SANGHVIMOV.
Okay. Yes. Definitely, there is a very good relative strength in the counter. So I believe one can hold the position and maintain stop loss below 421.
Nirav, at the current prices, Kotak Mahindra Bank a big buy. Last quarterly update was slightly weaker. No returns in the last 5 years. What's your view?
It's advisable to stay away.
MTA Tech, Mahesh from Maharashtra wants to know if a 1 month trade in this one makes sense. He's bought 100 shares at the levels of 7550. Vishnukant?
Yes, one can hold and maintain the stop loss below 6300.
Standard Engineering is the next one. Bindu from Hyderabad wants to know if he can enter for the long term. I don't know, Nirav, if you track this counter, but any view?
I think if there are better bets, I think one could have a look at something like a KC International, which is available at a very compelling valuation.
Okay, the next one is on Paradeep Phosphates. Pamanji from Nellore has bought it at the levels of 128. 769 shares is what he's holding. From a 5-year perspective, a good hold, Nirav?
Yes, definitely.
The next one coming in, and we have to get a question on HDFC Bank in the show. Nagesh from Bengaluru is holding shares at 657. Nirav, would you recommend him to continue holding?
you should continue to hold.
Okay, the next one that we have is coming in, and this is from Muthu, who's writing us from Bengaluru, holding around 3,000 shares of Eternal. He wants to know whether he can continue to hold this one or not. He's not mentioned the buying price, but Nirav, any quick view?
Yes, he should continue to hold.
All right, okay. That brings us to the end of this rapid fire round as well as Ask Profit. Now we've managed to answer more than 100 queries, 119 queries, both combining the morning and the afternoon show. Vishnukant and Nirav, thank you so much, of course, for helping us answer all those queries. With that, viewers, completely out of time on this edition of Ask Profit, but do stay tuned. India Market Close comes up next.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी.
कुछ तो बात है इस दिल में. PMark, the mustard specialist since 1933.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
Good afternoon and welcome from the NDTV Profit Suzlon studio. This is India Market Close. My name is Alex Matthew. With me is Hiral Dadia. And let's pull up the markets, because if you look at the benchmark Nifty 50, we're trading at just about 0.6% higher, and we're holding above 24,400. A couple of stocks are contributing to this, and you'll see that in the contributors chart. We'll talk about that in some more detail. I really want to pull that up because it's a story of HDFC Bank today. Pull up the contributors chart. while we're speaking, please.
And with that, post that, we should just look at the intraday chart because we've come off the day's lows to some extent. But
look at
this is the highlight.
It's 100 points practically that are being contributed by HDFC Bank and a further 23 points by Reliance Industries. Of course, ICICI Bank, you throw that in there, but it's primarily HDFC Bank. It's outweighing all of the losses that have come through from just about half the benchmark.
Yeah, what's interesting is the pressure that continues in terms of IT. I think people are now wanting to know what should one do with IT. So that's something we should talk about. Interesting is in HDFC versus Kotak Mahindra Bank as well.
Yeah.
And IT right now is at nearly the day's lowest levels. Let's just pull up the intraday chart of Nifty 50 as well, because we've hit an intraday high today. We were almost trading there and we've given up those gains. 24,458 is the intraday high that markets hit in today's session. We've come off from those levels by around 50 points right now. Where we end is going to be interesting to watch out for. Let's look at Bank Nifty as well, and then we'll look at the broader markets and the heat map in terms of Nifty 50. Bank Nifty, a very similar chart, but still you're seeing some smart moves, and this contribution, as you mentioned, coming in from the likes of an HDFC Bank and an ICICI Bank to some extent right now.
Very, very strong numbers coming through from the banking pack, most of them. But pull up the heat map for the Nifty 50, because on the one end you have HDFC Bank, but where Hiral is standing at the bottom it's a tale of two private sector banks. Kotak Mahindra Bank has posted a bit of a soft business update. HDFC Bank, on the other hand, posting a 14.7% increase in deposits and a 15+% increase in advances, which is better than what the street had anticipated. And I think this was poised and waiting for an up move for some time. In fact, it was trading below that 800 mark.
And
it's gone past that today.
The other sector which is buzzing is auto. Auto, after the June numbers, is seeing some good momentum today as well. Bajaj Auto, M&M, Eicher Motors, you have Tata Motors, PV, all of them trading in the positive. Some positive tailwinds are seen in terms of the consumption names as well today. And I think it's the monsoon which is aiding the auto sector, which is aiding the consumption pack in today's day of trade. But IT continues that downtick today. Apart from that, you have Apollo Hospitals, Power Grid,
Max as well.
Bajaj Finserv, exactly, Max Healthcare. So hospital is slightly on the downtick, but that's, I think, probably because of the run-up that we've seen last week as well in terms of where hospital names were concerned. But it's a very interesting, in fact, we should do a comparison of an HDFC and a Kotak Mahindra Bank in India market close, and that will tell you what's really fared well and what's not really fared well between the two of them. Broader markets, let's pull up that one on the screen.
Let's pull up the intraday for the mid-cap index. It's trading with gains of just about 1/3%. Pull up the small-cap index very quickly as well. This is more or less what you've seen in the recent past, narrow gains, if at all, for the broader markets. Pull up the
advanced decline ratio also we should look at.
Let's look at the sectoral heat. Okay, so you've actually crossed paths. Those worms have actually changed hands, and you have the declines that are higher right now. But pull up the sectoral heat map and you'll see that right on top you have realty, you have consumer durables. Banking is actually right here in the middle of the pack. It's just about 0.6%, because most of those gains are being contributed to by a couple of names, particularly HDFC Bank, and on the bottom you have IT, you have PSU banks. In fact, you have pharma that continues to trade with gains of about 1/3%, and healthcare just about flat to positive, despite the fact that Apollo Hospitals and Max are trading in the red.
Yeah, and real estate is a good story right now as well, because that's been picking up since quite some time. Your business updates as well have been pretty much on the positive side, and that's what is providing that tailwind when it comes to real estate. Consumption, auto, again, beneficiaries in terms of where the rains are concerned.
But what are the key factors today?
It's going to be interesting to watch out for. Let's just pull up what's happening in the markets in terms of levels as well, and that's what is the story. If you can just have those lines on the screens to tell us in terms of the support, the resistance. There you go. 4 consecutive session of gains. Now, as Alex was also pointing out, private banks, especially it's HDFC Bank and a Reliance Industries, which is coming in at a rescue today. So these two are the packs. IT, again, profit booking, and this is after 2 sessions of gains. There is the profit booking which is continued with regards to IT as a sector. Apart from that, if you have to look at the capital market stocks, they have been under pressure, and that's only on the back of lower volumes. Lower volumes impacting all of them. We will talk about these companies with the guests as well. there is fund rotation also happening. Now, if you have to talk about the performance in terms of PSU banks versus private banks as well, on a YTD basis, your PSU banks have literally outperformed your private banks. So that's where the rotation is happening, where there is profit booking coming in the PSU banking space, and that money is moving from the PSU banking space to the private banking space. 24,450, that's where the resistance is in terms of Nifty 50, and that's the reason why you're seeing profit booking coming in at higher levels on Nifty 50. If Nifty breaks above 24,400, then there is the potential of Nifty unlocking a rally towards 24,500 and then a 24,600 as well. Apart from that, where is the support on the downside? 24,200 to 24,250 is where the support lies on Nifty 50. Moving on, if you look at Bank Nifty, before that we'll just see it's a tight band for 3 weeks where the index has actually been consolidating. Now, people want to know whether it's going to move on the upside or the downside, and that's what our experts are going to tell us. In terms of the short term, a range-bound move, underlying bias remains positive, so I think nothing to worry on that side. Your stop losses are protected. Short-term picture is favoring an eventual breakout above 58,800, and this is in terms of where Bank Nifty goes. If you look at Bank Nifty, if it is able to move above 58,500 to 58,800, then you could see that next leg of upward rally, and obviously that could probably come in from the private banking space. 56,800, 56,000, these are the support levels that you're tracking as well in terms of Bank Nifty on the downside. So you know where to watch out for if there is a rally in terms of banks. It is the private banking space versus the PSU banking space where the rally could come in as well, Alex.
In fact, those are numbers that we should talk to Hemen Kapadia about. He's joining us, DR Choksi, FinServ, as well as Dharmesh Kant, Head Equity Research at Chola Securities. Gentlemen, thanks so much for taking the time. Pleasure speaking to both of you. And I'm pretty sure that y'all are comfortable sitting at home. It's raining quite heavily outdoors and not necessarily looking forward to heading out at this point. But Hemen, let me come to you first on what you're seeing with regard to the benchmark, right? Do you see some sunshine that we've been missing here in Mumbai for the last 5 days?
A very good afternoon to you, Alex. Thank you for having me on the show. It's always a pleasure. Well, I am looking for sunshine, but yeah, the Nifty does have some sunshine. A bullish gap which hasn't been covered up. In a way, it's good, in a way bad. It's bad in the sense there's always a risk of it getting covered up. Having said that, if it doesn't, it's good. 24,344 was an important level the way I see it. First time we are above this level, and we could be closing above that today since 22nd April. So we close above that today. We had to 24,588, and that is a medium-term swing high. And above that, I think things should really start looking much better. So yes, Alex, some sunshine as far as the Nifty is concerned. But there is more sunshine if you look at the small cap and the mid caps also, Alex. Small cap suddenly is looking better, mid cap, realty. I mean, it's all over the place. But yeah, finally things are beginning to shape up. The VIX is below 12, which is a big help. I wish the Bank Nifty could participate some more. But like I think Hiral mentioned, it's good about 58,712. But yeah, stock specific things are looking better. Nifty is now looking better also, Alex.
Okay. Hemen, good afternoon. This is Hiral on this side. So does this mean that floods of profit for investors in the broader markets, and if that is going to be the scenario, in terms of the banking space as well, it's going to be the mid-cap and the small-cap banks where there is more juice, there is more flooding happening?
Well, very good afternoon to you, Hiral. Yes, I think so. What is happening is this time around, I feel some of the private sector banks are looking better than the PSU banks. PSU banks have had a very nice run. You can JK Bank, you look at Bank of Maharashtra, you look at State Bank. Many of the banks have moved. KTK Bank, done well. I believe the time has now come for maybe some of the private sector banks to do well. But overall, if you look at the Bank Nifty, Hiral, I mean, we've led the move and it sort of cooled off. Now it's consolidating, but the setup is okay. Nifty better, but yes, and like I mentioned, Hiral, mid caps, small caps are threatening to steal the show finally.
Okay, Dharmesh, hope all well at your end, and a question to you. I'm pretty sure that you spent some time looking at all of the business updates seemingly in the banking space and in the consumption space, things are looking better than previously anticipated. Would you agree?
Yeah, good afternoon, Alex. Yeah, things are stabilizing at my end. The updates were very good. I mean, it was a surprise as far as the business updates found. Be it automobiles, the normal consumption FMCG space is concerned, or the fashion retailers and the banking space. We were expecting around 15-17% kind of a growth, but the updates are far better than what has come through. I mean, automobiles almost 20-23% kind of average growth rate has been there. Even the FMCG space are setting 15-16% kind of growth overall. And fashion retailers are already 20-23%. And banking, private sector banking space, which was languishing last year at around 10% kind of a credit growth mark, has come off. It is now north of 15%. So 17-18% is the average growth run rate being noticed out there, and that is quite heartwarming. Public sector banks have been reported the numbers in line with what they were. The only caution from an investment perspective, from a long-term investment perspective, on the stock price movement is the fall in the CASA ratio. So that is definitely going to make a dent when they report the quarterly earnings on the NIMS front. That is what has to be checked into account. Otherwise, I mean, the numbers look quite excellent. And going by the way the other updates are, be that tax collection as well, on the indirect and direct tax, I don't think there will be any NPA concern this time around.
Yeah,
okay. Yeah, you know, there will not be any NPA concerns this time around, but we will talk about this space in detail when we are doing the analysis with regards to HDFC Bank versus Kotak Bank as well. But before that, Heyman, your top picks, you know, because you're so bullish right now in the broader markets, I'm sure investors are all wanting to hear, you know, what are you recommending?
Okay, Hiral, firstly, buy call on IndusInd Bank. It's given a breakout after a long time. It's been a perennial underperformer. Now sort of reclaiming its share back into the thing. One can buy IndusInd Bank 1,000, stop loss 960, target 1080. The setup has improved, high tops, high bottoms, above important longer term moving averages. Mechanical indicators have given a crossover buy on the daily, on the weekly and the monthly. So looking good. Second one is a buy call on SRF. It's given a breakout from a symmetrical triangle on the daily chart. One can buy SRF at 2820, stop loss 2720, target of 2920. Once again, nice setup, pattern breakout, everything looks hunky-dory. It's taken its time to consolidate, and now it's given an intermediate, it's begun an intermediate uptrend here.
Okay. By the way, news breaks first at the bottom of your screen, and you'll see an update from India's largest carrier, that is Indigo. It's cautioning people to keep checking the status of their flight. Of course, there are reports coming through that several flights have gotten cancelled on account of rains. Particularly in Mumbai, there is, of course, a red alert warning that was sent out yesterday with regard to today's forecast. And it has been suggested that you should stay home if you don't have a requirement to step out. Flights to from Mumbai, Pune affected or impacted on account of the rains. And even the roads, by the way, beyond just the affected air traffic, the roads between Mumbai and Pune have gotten affected on account of the missing link project or that stretch of the Ghats being affected. And you see some of those visuals on the right of your screen as well.
And there is a high tide at 3 p.m. as well. And that's the warning that if the rains continue with this quantum and the high tide coincides at 3 p.m., there is a possibility of, you know, flooding that could happen as well. So just a cautionary note coming in that if you don't have too much of urgent work, please stay indoors. That's what is being communicated by the government as well so far. But Radico Khaitan, that stock is on investors' radar as well. Let's pull up that one on the screens because it stands out as our stock of the day on the back of the strong magic moments growth. 4.5% up move coming in there. My colleague Mahima was standing by to tell us, Mahima, what is this entire story about? Is it premiumization that is playing out now, and that is what is going to actually fall back, the company is going to fall back on in FY27 as well.
Right, exactly. It is exactly that, Hiral, because Magic Moments growth in terms of volume is indicating that the prestige and above category is going to do very well for Radico Khaitan as a whole. Now, just before we get into the details as to what this business update for Magic Moments especially is telling us, a quick look as to how the stock has done. In the last 6 months, it's been up around 30%. 1 year, it's seen a growth of around 54%. Now, with regards to the update coming in Q1 FY27, overall growth in P&A, that is prestige and above category, which consists of Magic Moments, the overall growth has been anywhere between 48 to 50%. Magic Moment has seen a growth of overall 43%. Now, what does this indicate? So, the audit did come out with a report which said that volume growth could surprise overall, once the entire numbers are out for Q1 FY27 with a 33 to 35% growth. The prestige and above category will grow at that 33 to 35% mark on a high base of already 41% of growth, and growth will be significantly ahead of the management guidance of around 20% mark. In terms of FY27 guidance that the company had laid out in their last con call, the first one is they're expecting to deliver around a 25% growth in the luxury portfolio. They've guided for 125 basis points EBITDA margin expansion FY27. This largely on account of the UK FTA benefit that is going to reap in for the company, and capex guidance of around 150 to 175 crore is what the management is expecting for FY27. If we take a look at the valuations, well, it's never been cheap, and it's not looking cheap as well, because the 5-year average at 80 times currently, it's trading around that mark, but 1 year forward is at around 70 odd times. So 70 odd times 1 year forward is not looking cheap as compared to others in this space itself. And if we take a look at the analyst recommendation as well, there are 12 buy calls. There's 3 hold calls and 1 sell call, but with a negative return potential of around 3.2%. So this is the overall view of what's worked for Radico Khaitan and why it's buzzing in trade today.
Okay, thank you so much for that, Mahima. In fact, Dharmesh, let me take this question with you. For a Radico Khaitan, if you have to look at analyst recommendations as well, majority of them have a buy call. Return potential is still negative. Do you think it is a re-rating candidate number 1? And if no, which would your top picks be from this entire beverage space?
I mean, in alcoholic beverage space, Radico has been a clear outperformer compared to, United Spirits and the others in the play. So they have been gaining market share consistently over the last 2-3 years, and last year has been phenomenal for them. Prestige and above is a category which has been doing well for all of the alcohol bev players out there, and Radico has been a front runner in garnering the market share. So even their recent whiskey launches in the Royal Ranthambore or the Jaisalmer brands have been getting quite a bit of market traction out there. We think valuations in this space, not only Radico, others are also expensive, none is cheap. It will continue to be so. And the potential of this market is around 2 crores of new, people of the drinkable age is added to the population every year. So that's the inorganic market share where, the traction can be far higher. And that is the segment where a lot of activity has been happening as far as new launches are concerned. So the company which will be coming off with more new launches are the ones which will be gaining traction, because now the choice is not on sticking to the brand royalty. It's more of trying out a new variety of fruit mix and other kind of whiskey. So there, I think Radico stands tall. If you want to be invested in this basket, this is our top pick. The second one, which we have been, closely watching and liking, is the Tilak Nagar Industries. After their Imperial Brew acquisition, there also a good turnaround has been seen, and there also P&A has been doing very well. So these two companies, I think, if you want to be in this space, a good portfolio buy from 2 to 3 years perspective. So valuations will remain expensive, but I think 50-60% kind of a PAT growth is likely on the cards for next 2 to 3 years.
Okay, all right. So it's a comprehensive review that you've just gotten on the alcoholic beverages space. By the way, a few stocks from the broader markets that are doing particularly well in trade today. One of them is Advent Hotels. This is after a stake sale to Prestige Estates of one of their projects here. 500 crore rupees is what they have gotten. Stock is off the high point of the day, but it's doing particularly well. A few more stocks in the broader markets as well. And you have Welspun that is doing incredibly well, up about 8%. Dixon Technologies is absolutely buzzing in trade today, up about 6% or thereabouts. Swan Energy, Zen Technologies, and Manappuram from the financial pack is gaining as much as 5.3% or thereabouts. Radico, by the way, which we just marked, is up about 4.5% as well. But Schneider Electric is what we're actually focused on, but not the one that you're probably thinking of. Schneider Electric President Systems is the stock that we're talking about. It's continued to remain, this is not the right stock. So pull up the one that we're, yeah, there you go. So it's locked in upper circuit, extending its remarkable rally since the listing last month. The stock has surged nearly 130%. And it has now hit upper circuit for 13 consecutive sessions. So what's happening with this stock and what does it do? How is it different from Schneider Electric? Parth is joining in to tell you all of what I just asked. Parth?
Absolutely. This is a very interesting counter, Schneider Electric President Systems, and this is not a normal listing on the stock exchanges as well. First of all, if we start with the stock performance, the stock listed on 12th of June and has been hitting continuous upper circuits. In fact, if we include today's date as well, the stock has hit 13 upper circuits in a row, gaining over 130% in trade since listing. But as I mentioned before, this is not a normal listing on the exchanges. Let's go back into time and understand what has happened throughout the years. So if we start from the beginning, then this company was established originally in 1960 as APW President Systems. This entity was previously involved in the design and manufacture of IT and networking enclosures, and they used to serve industries like the telecom and general electronics sectors. But what happened later was really interesting. In 2011, Schneider Electric, which is a major global entity, acquired 55% stake in this APW President company for a 62 odd crore investment, and another 20% in the APW company was acquired via a mandatory open offer as well. Now at that time, this entity was listed in the exchanges of Pune and Bangalore. These were regional stock exchanges, but later SEBI had de-recognized these exchanges and was trying to bring companies into the nationwide listing. But instead of nationwide listing, what Schneider President Systems did was they filed for a voluntary delisting in the month of February 2017. The promoter offered the shareholders an exit price of 200 rupees versus the last trading price of 250 rupees. That was a 20% discount, and because of this, the minority shareholders were not happy. In fact, 9% of the minority shareholders filed a complaint with SEBI that the company was using some loopholes to either exit cheaply, and they put up a challenge to the company that they need to either delist properly or they need to list nationwide. So this what followed afterwards was a huge legal battle. SEBI initially dismissed the minority shareholders' complaint, but later on the shareholders appealed to the SET as well, and SEBI finally passed an order in January 2021 forcing Schneider Electric President Systems to do a nationwide listing. The company again challenged this order in the Bombay High Court in 2023, but later withdrew that appeal. So that's how the Schneider Electric President Systems finally got listed. And if we lastly talk about why the company has been hitting the continuous upper circuits, that's because Schneider Electric holds 74% stake in the company, reducing the free float a lot, and that creates supply scarcity, and because of this, very small buying can trigger upper circuits as well. So this is the reason why the stock is buzzing.
Got it. All right, that's an interesting story for sure. Now, let's get a ground check of what is happening in Mumbai. The monsoon, of course, has intensified and it's triggered multiple alerts from the IMD across the region. Let's go across now to my colleague Saurabh Gupta, who's joining us from somewhere in Mumbai. Let me actually check where he is. Saurabh, where exactly are you and what's the situation like where you are?
Why the BMC, the civic body of Mumbai, has issued an advisory asking people to stay home. Behind me is, of course, the Mumbai's most arterial road, which is the Western Express Highway, which leads to the northern suburbs of the city, and that's where most of the impact of the rains are being felt. Vasai, Virar, Palghar district is seeing a lot of heavy rainfall, and the Western Railway services in that part of the city have been affected. Now, while Mumbai continues to be battered by heavy rain, many would argue that this is a relief given the fact that we were staring at an abnormally low monsoon which could have had its own set of problems. This rain, even though it continues to batter the city, is making up for the lost monsoon in June. It was greatly delayed, and therefore many would see this as welcome. However, for a city like Mumbai, the financial capital of the country, disruption due to rain continues to cause havoc, and of course also continues to disrupt normal life, leading to losses as well, because there are loss of man days and people cannot get to work. So all of that is there, notwithstanding the fact that the rains are of course welcome. And obviously Mumbaikars need the rains, so to speak, because the reservoir levels also are low, but the rain continues to pound Mumbai. Low-lying areas continue to report some waterlogging. The BMC and the Weather Department have issued advisories for citizens.
Saurabh, thanks so much for joining in. Of course, stay safe. It goes without saying. Joining us to talk about not just the rain impact in Mumbai, but actually more importantly, what the impact is in several parts of the country. Because while the deficit has reduced, the real question has to be about the spatial distribution of the rainfall. Agriculture economist G. Chandrasekaran is actually joining us right now. Mr. Chandrasekaran, thanks so much for taking the time. Can you give us a sense of how you see things moving? Because we're likely to see a deficient monsoon, but it's not just that number that you have to pay attention to. It's the rate of the sowing, it's the spatial distribution. How are you seeing things?
Yes, it's called a temporal and spatial distribution in terms of time and in terms of space or geography, which is fine. Now, as of 5th of July, I don't think we are in a happy situation as a nation, primarily because Rajasthan, Andhra Pradesh, Gangetic, West Bengal have so far, that is as of 5th July, received normal rainfall. The rest of India, including Gujarat, is facing serious water deficiency or precipitation deficiency. That's a matter of concern, really. But I was just watching during your show earlier, the satellite picture. The satellite picture shows huge cloud cover over Goa, Maharashtra, southern Gujarat, and coastal Karnataka, which is obviously bringing a lot of rain, including into Mumbai, where I live. And on the eastern parts of the country, we have huge cloud cover and rainfall in Andhra Pradesh, Orissa, West Bengal, Madhya Pradesh, parts of western UP and Bihar. So this is relief. But the concerns have not abated, because how long this rainfall will continue is still a question mark. But I'm sure farmers are happy and they have started to plant in a fairly significant way over the last 2 or 3 years. And if I have to speak about sowing, may I?
Sure. But Mr. Chandrasekaran, a quick point I have over here is, you can add your sowing aspect to it as well. If you have to look at the El Nino risk that continues to remain intact right now, the other bit is the question becomes over the next 2 months, if you have to actually determine whether the current monsoon will be able to bridge the deficit and support agricultural output. How are you looking at that aspect and the overall impact then?
I'm afraid the answer is no. The current spate of rainfall, the current downfall of rains in a massive downpour that I'm seeing in Mumbai and other parts of the country is not going to create enough subsoil moisture, is not going to remove the looming threat of El Nino. That is for sure. But what this rainfall, this round of rainfall does is to encourage and help farmers to start planting. They had waited for almost 20 or 25 days in June. And now that it has started to rain, this will help them start to plant. But what will happen in August, what will happen in September, we still don't know. The IMD had said very clearly that even in July, the rainfall is likely to be less than normal. And if the IMD is proved right, of course, it's going to cause concern. But what is more important is August rains. July, first 5 days, we've had good rains. And I'm sure over the next 4 days, we will have good rains. And perhaps it will cover the whole country. But what happens in August, what happens in September is a crucial question. And those are the periods when the crops will have to receive enough moisture, enough precipitation.
Just one last question, and it has to do with reservoir levels, and it has to do with the quantity of our agriculture, Mr. Chandrasekhara, that is dependent on irrigation. Is that something that you will be relatively comfortable about, considering the kind of rainfall that we've gotten? Even if I look at from Mumbai's perspective, when we had reached about 10% of reservoir levels, now those concerns have dissipated somewhat because the lakes are full once again. Is that a silver lining here?
Absolutely. I think a good point. One, it has substantially reduced our concerns relating to water availability, particularly for agriculture from the reservoirs and drinking water availability. Second, it has also improved water availability for the livestock, which is very equally important. Like for people, when livestock need water, and therefore that's going to improve that water availability, and therefore that's certainly a silver lining, a big relief. But how long this relief will last, honestly, no one knows.
So everything we have to wait and watch and see, but August and September becomes absolutely crucial to understand what the impact will be. But thank you so much for joining in. It's always a pleasure to speak to you and get your views as well. In fact, let me take a quick question with both Heymen and Dharmesh. Heymen, on the charts, some positive momentum that you're seeing in terms of the consumption names as well. Auto has been doing well after the June numbers, and the commentary also has been very positive for FY27 by the management. On the charts, if you have to look at consumption and auto as a space, anything that you like?
If you give me a preference, Hiral, I would prefer the autos. Maruti has woken up after quite some time. Bajaj Auto is oversold. The auto index, if you look at the Nifty auto index, Hiral, that looks promising. And if I can just take 30 seconds, I think the Nifty metal index is going to bounce. It's probably in the process of bottoming out this week. So that is also something we can look at. But coming back to your main question, I would prefer auto vis-a-vis consumption, at least at this point in time. Hiral.
Last quick view, and 30 seconds, unfortunately, because we're running out of time, but one specific area that you're most focused on heading into the earnings season, where you will perhaps look to get in at this point because you're fairly confident that the numbers will look good?
Yeah, Lisa, the question is to me?
Yes, Dharmesh, to you.
Yeah, I mean, the BFSI space, the entire financial space is where we are watching very closely. So there we are expecting at least 15 to 20% kind of earnings growth. Last year it was, if you look at the banking space, the earnings growth was in single digit. So that was a big drag on the Nifty 50 EPS. So this time we are looking out on that space that it should be 15% plus kind of growth. If that's the scenario, we will end FY27 with near double digit kind of a growth on the Nifty 50. That is the space we are watching for. Others are definitely like automobiles and all will definitely do good based on the numbers which has rolled out so far.
All right. Heymen, Dharmesh, on that note, thanks so much for taking the time. We have to slip into a very quick break. We're holding with gains of about 0.6% for the Nifty 50. Back on the other side. Stay tuned.
Superstar Stocks of the Day, presented by Tata Azura, हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे,
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी। ये आपके लिए।
कुछ तो बात है इस दिल में।
PMark, the mustard specialist since 1933.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise. Welcome back. You're watching India Market Close and you're watching this live from the NDTV Profit Suzlon studio. It is that time of the show to head across to my colleague Shomit Sarkar, who's hearing all of the buzz from the dealing rooms. This is a special segment called Heard on the Street. Shomit, a lot of buzzing stocks on account of the business updates, particularly in the consumption pack. But what's in your list today?
Well, a host of stocks that dealers are talking about. Firstly, when it comes to Biocon, there are some sell flows on the large HNI desk. Dealers are expecting a block deal very soon on this counter. When it comes to Adani Power, there are buy flows on institutional desks. Both foreign and domestic institutions have been accumulating this counter in trade, and delivery volumes are seen on the higher side. For Hindalco, multiple dealing rooms are recommending buy calls to their clients based on technical charts. And when it comes to Jubilant Food, there are buy flows. The stock is also up over 3%, around 2% in trade, and dealers are expecting a strong Q1 update to come in from this counter. When it comes to Manappuram Finance and SRF, there are buy flows on PMS desk, and dealers are expecting strong Q1 numbers from both the names. And lastly, when it comes to Industar, there are buy flows on FI desk. Dealers expect some positive news flow very soon when it comes to Industars.
Okay, interesting names there, Somit. Thank you so much for that. In fact, we do have Osho Krishnan, Chief Managing Technical and Derivative Research at Angel One, and Siddharth Khemka from Motilal Oswal Financial Services also joining in. Welcome to the show, gentlemen. Osho, from the names that actually Somit has been talking about, anything that you like on the charts?
Very good afternoon, Hiral. Firstly, thank you for having me at the show. Well, yes, there are various counters which are even into our radar also. Firstly, I want to discuss on the technical parameters of SRF. Then SRF has seen very strong momentum in today's trading session. There has been a strong consolidation breakout. The counter has emerged above the 200-day simple moving average. Plus, there has been multiple positive crossover within the exponential moving averages. So there have been multiple technical developments, positive developments, and even on the derivative front, we are witnessing long build-up. So I'm expecting a decent movement in SRF. So this is even our pick also, and we are expecting a target of nearly 2950 from a short-term point of view. And for short-term traders, I'm expecting 2760 to be cushioning zone, and one should keep it as a stop loss. The other counters are also looking quite decent to me. Biocon on the technical front has seen a decent consolidation around the 20-day exponential moving average. But at current levels, it is having a very strong resistance, which is very nearby, 435, 440. So if it breaches the zone of 440, then there will be conviction on the higher end. But till that time, it will be advisable to trail profits with 418 as a stop.
Okay, before we go across to Siddharth, allow me to present a bit of internal research, because this is going to be one of the big talking points today. It is HDFC Bank on the one end and Kotak Mahindra Bank on the other end. At the top and at the bottom of the pecking order for the benchmark Nifty 50. They're both reacting to business updates. Pull up the charts while we're speaking about it. There you go. One is trading with gains of 3.7%. The other is trading with losses of 3.9%. What are the numbers that the street is focused on? First, to set the context, we've got Shivam joining in. Shivam, how do the numbers stack up?
So both the stocks are buzzing in today's session, and both the banks have posted their Q1 business updates. So let's look at both the banks' numbers on a comparative basis to see which bank has performed better. Starting with the gross advances, the HDFC Bank has seen a stronger credit growth on a quarter-on-quarter basis, where they have recorded a 8% growth, and also this is better than the street expectations. And also a few of the reasons that led to this stronger credit growth is higher working capital demand, and also the bank has seen a corporate loan demand on a higher side. Second is the total deposit, and in terms of deposit, the HDFC Bank has gained momentum, while the Kotak Bank's deposit growth has remained largely flat on a quarter-on-quarter basis. Also, this is due to the sector-wide pressure that has been witnessed in the deposits due to the increased intensity of competition for garnering the deposits. And we have also seen in recent times that there has been some regulatory benefits also, as the banks are increasing their FCNR rates also for garnering more deposits. Overall, in terms of credit growth and deposit growth, the credit growth has outpaced the deposit growth in both of the banks. And in terms of CASA deposit, HDFC Bank has shown some kind of stability, while the Kotak Bank has faced a sequential decline in CASA. CASA mobilization has also remained relatively stronger for HDFC Bank. In terms of business updates, so overall the HDFC Bank has performed better compared to the Kotak Bank for Q1 FY27. Talking about the valuations, both of the banks are trading below their 5-year average price to book multiples. And in terms of 1-year forward price, the banks are currently having 1.95 times of valuations, and Kotak Bank is having around 1.84 times. So both of the banks seems attractive on the valuations front. In terms of analyst views, the return potential of the HDFC Bank is around 26%, and all of the analysts that are currently tracking the stock has given a buy rating. And for Kotak Mahindra Bank, the return potential is around 21%, and 81% of the analysts has given a buy rating on that.
I'm curious about what, thanks so much for that. I'm curious about what Siddharth makes of this, because Siddharth, I think the street and particularly investors of HDFC Bank have been waiting for a day like this for a while. It's traded sub that 800 mark for quite a while. What do you think of the numbers?
Hi, good afternoon. I think definitely a welcome number from HDFC Bank after a very long time. But I think if you look at the quarterly results, last 2-3 quarters, they have kind of shown a sharp improvement, especially on the deposit side, which had been a key concern post the merger with HDFC Limited. And I think the healthy growth continues. And this quarter, business updates, especially if you see loan growth, advances grew about 15% and even the advances were much higher, you can say, compared to our expectation on both on a sequential basis plus on a Y-on-Y basis. Deposits grew also 14.7%, and if you can see that some of the other banks have also shown strong strong growth. So for the quarter, the systematic credit growth has sustained above 17% for the past 2 fortnights, and we expect this credit growth momentum to continue, supported by pickup in the corporate lending, steady retail growth, as well as sustained traction in the MSME gold loans. And hence, for the full year, that is FY27, we are working with a number for the system credit growth at about 14%. And now within that, if you see the private banks, they are kind of showing up much higher growth compared to PSUs, which are on a high base, and hence we are expected to see a much higher growth from the private banks at about 17-18%, so more than 20% growth compared to PSU banks, which is about 10% or kind of growth. Now, if you come to, I think, Kotak Bank deposits growth, that kind of disappointed. And that is again something that we are seeing that Kotak struggling for past few quarters. While the loan growth has largely remained in line with expectations, the deposits surprised us on a negative as well as a sharp decline in the CASA. So clearly, at the current valuations, it looks like HDFC is a much preferred pick. But if you look at among our top picks, ICICI, HDFC, SBI, and within the mid-cap space, AU Small Finance Bank, these are some of the banks that we like from the banking space.
Thank you, Siddharth, for that. In fact, Osho, coming to you, if you have to look at the charts within the private banking space, what would your top pick be?
The first one will definitely be HDFC Bank, because the counter have seen very strong correction, and in the recent period there has been a decent recovery or consolidation at the lower end. And with today's strong momentum, I expect there is very strong risk reward ratio for HDFC Bank. So that will be the first preference from the private sector bank. On the higher end, on the technical fronts, I am expecting 848, 850 to be seen as the immediate target. And if it breaches the zone of 850, then again, from there onwards, there is a strong room on the higher end. 892 to 895 will be the next potential target for HDFC Bank. The other counter is ICICI. Definitely, the counter has seen very strong momentum. It has been into a strong vertical rally. There has been a double bottom formation on the daily time frame chart. On the higher end, 1440 is the first very short-term target, or like a BTST kind of a target for ICICI Bank. But if it breaches the zone of 1440, then the positional view will turn exceptionally bullish, and 1480 followed by 1500 will be the short-term target that one can expect in ICICI.
Okay. All right. Let's head across now to Mahima, who's joining in to tell you about the stocks that are buzzing in trade on account of higher volumes as well as on the back of business updates. There are quite a few of them, Mahima, today.
Yeah, absolutely, Alex. I'll start with the volume buzzers first. The first one on my list is Dalmia Bharat Sugar. Now, this is buzzing almost 75 times. Its volumes are almost 75 times its 30-day average, and the stock is up 11% almost as we speak. The next one on the list on account of volume buzzers is Welspun Corp, where volumes are almost 6 times its 30-day average, and the stock is trading almost 8% higher. The last one on the list on the back of volumes, of course, is Sobha, where volumes are 5 times its 30-day average. It, of course, also did come out with its business update, but the stock is seeing just gains about 1% odd. Now, if we talk about some business updates coming in, I think a lot of names in the consumption pack did come out with their business updates. I'll start with Godrej Consumer because there was a strong one coming in. In terms of the consolidated business, the revenue is expected to grow in high teens. Underlying volume growth is going to be in high single digits, and EBITDA is going to see a growth of double digits. And this is despite of the inflationary pressure that it's seen in the last couple of quarters. Standalone business is expected to have a double-digit revenue growth and high single-digit volume growth. International business, this is where the surprise came in because Indonesia was the weak link for Godrej Consumer, and that has seen a significant bounce back. Last quarter, we did see recovery coming in, but this time it's expecting a growth of around mid-teens with double-digit volume growth as well. Guam as a whole is expected to report extremely strong double-digit growth as well. The next one on the list is Senco Gold, where overall revenue growth stood at 60% YY basis versus gold growing around 63%. Same-store sales growth stood at around 38% YOY, diamond growth at 40%. This is the studded jewelry part, and overall volume growth stood at around 15%. Old exchange contributed around 43% to the overall sales volume, and studded ratio stood at 11% mark, which has been the case for last so many quarters. They did open around 8 new showrooms in Q1 FY27, and they have said that heavy discounting of gold prices, benefit of custom duty rise will put pressure in Q1 margins, but Q2 is where they are expecting quarter to be slightly softer because of it's not being a festive season. Lastly, Raymond Realty is also in focus. Overall, if you take a look at the stock performance today, it did see an uptick and almost did touch an intraday high of around 6%. But in the last 5 days, it's up 13%, 22% in a month, and almost, it's down, in terms of its stock performance, it's seen a growth of around 22% in just a month. Now, if you take a look at the Q1 business update coming in, overall collections saw growth of around 47% and pre-sales saw a growth of around 129%. So these are the overall updates coming in.
Thank you so much for that. So that's with regards to a couple of business updates that have come in. Siddharth, anything with regards to where the real estate space goes? That sector has been one of the top performing sectors in the last couple of days. The updates also seeming to be very strong. With where valuations stand, does it look attractive?
Definitely, I think This is one sector which was under pressure for last couple of quarters, but now we are seeing a good recovery with some of these large players gaining market share amid consolidation and exit of some of the smaller players. The market share for our coverage universe in the real estate space has expanded by almost 532 basis points to about 20%, and is further expected to go up over the strong pre-sales growth over the next few quarters. What we're also seeing is that the sector fundamentals remain healthy with a disciplined supply, low inventory overhang, as well as a strong asset churn. And we have also seen some of the large players reducing the leverage and improving the balance sheet. So net debt has seen sharp reduction over the last few years, especially post-COVID, when we saw huge sales growth. The cash flows were used to reduce debt rather than going out and doing further capex. So that has also led to a healthy financials. And now coming to the point of valuation, I think the last one year of underperformance, and now the inflationary overhang reducing with crude oil coming down. Monsoon started progressing. I think the interest rate scenario is expected to remain stable for some more time, which is also positive for the real estate pack. So we definitely like the sector right now. We believe that the upcycle is likely to resume again with strong pre-sales numbers already started getting reported by some of the players. Plus, if you see, some of the players are now expanding on a pan-India basis. So, for example, Oberoi now venturing out of its core Mumbai region and now doing a launch in the NCR, gaining a lot of traction there. So we like some of the large players like Lodha, which is one of our top picks, Godrej Properties, DLF, and within the mid-cap space, Aditya Birla Real Estate is something that we like.
Got it. Okay. All right. On to another interesting piece, and this is something that has to do with the historical performance of July. History suggests that July has been a favorable month for Indian equities relative to the broader emerging market pack. We've got Sharad joining in to tell us about some of the insights that he's picked up on the index performance versus other emerging markets in July. What does it look like?
Well, despite the emerging markets heavily being skewed towards South Korea and Japan, of course, because of the AI play and also weaker rupee, July still stands to benefit the Indian markets. And to keep things even, I have taken dollar terms on my analysis. And look at that, from 2022, the month of July has been really strong when it comes to dollar returns. And you compare that with the emerging markets, how things have been, and it's been quite mixed. Now, let's take the average also to see what's the entire picture looking like. In terms of the dollar returns for Nifty index, it is in the positive. It's 2% up. And right now also this month, we are already up in terms of dollar terms, 1.9%. But for the emerging markets, it is still in the negative. But what are the key reasons for it? That's a very important to track. Monsoon is reducing the El Nino concerns. FIs have turned buyers in the cash market after 4 sessions. And if you look at it, there are other key positive triggers also which should be there in our radar. And of course, this includes a strong Q1 operational updates. We saw in banks, we saw in consumption names, the geopolitical stress that is coming down. And lastly, of course, the risk-on sentiment is coming back, and the Indian is under-owned in the emerging markets. So of course, the FIs might be taking larger positions as well. That's what dealers are talking about. But there is an overhang as well. Rupee remains volatile. Also, there are a couple of more other overhangs I would like to point out, and this, of course, includes the delay on the expected tax relief for FIs. That's what the street is expecting, and the completion of India-US trade deal. Still now, we don't have the full clarity of it, but nevertheless, we know what's going to happen. But 3 key factors: monsoon coverage, Q1 earnings. Remember, there'll be war impact also, and the FI flow. So this is the entire picture, but don't rule out India. Emerging markets might not be that good, but India's July history is strong.
Okay, all right. The history in July is strong. Osho, the question is, what are the key levels that you would look at? Because 24,400 seems to be taken out, and we're holding, if I'm not mistaken, looking at the screen right now, yeah, we're holding well above that. So where do we go from here? We've been in this broader range for well over a month now, right? So when do we break out from that and move towards the 25,000 mark? Does that happen in July?
See, overall, there are various positive key takeaways in the recent period for Nifty. Firstly, there has been multiple crossovers between 20 and 50-day exponential moving average, which has been taken place after very long period. So that is a very positive front for the Nifty charts. Second, on the put writing front, we are witnessing that the put writers has been very much aggressive now on the lower end. 24,200, 24,300 have been very strongly positioned by the put writer. So that is a very strong support zone. So I'm expecting that in the coming period, Nifty has seen an upshift in the support base. On the higher end, the golden retracement is placed around the zone of 24,565 on the spot level. So that is the first hurdle. If we break through the zone of 24,565, then from there onwards, 750 will be the next target. So I will rather advise to go one by one step at a time, and not focusing directly on the 25,000 zone, because there is a positive sentiment in the market. But again, there are some key hurdles which are just few steps forward to the market. So 24,565 followed by 24,750 are the resistance zone. Once we break through these two important hurdles, then 25,000 will definitely be seen in the coming future.
Okay, so that's with regards to Nifty 50, but we're just like probably towards the lag end of closing. Your BTST calls, Osho?
First counter which is looking very positive to me is Zen Technology. Zen Technology have seen volume-based breakout in today's trading session, currently hovering around the zone of 1850. So it is looking very positive. One may look to accumulate the counter at current levels. Advisable stop loss will be today's low, near about 1756 will be the advisable stop loss. And on the higher end, 1960 followed by 2000 is the target that I'm expecting as BTST, followed by positional basis. The second counter which is looking very positive is from the pharma pack. Glenmark is looking very positive to me. There has been a consolidation breakout that has been backed by decent volume, and Glenmark is looking very positive on the daily time frame chart structure. So one may look to accumulate this counter with a stop loss of 2210, and on the higher end, 2360 is the potential target that I am expecting for this counter.
Got it. All right. By the way, there are a lot of stocks that are buzzing on account of notes that have come through from brokerages as well. A few standouts have been picked up by my colleague Puneet. Puneet, what is on your list and what stands out with regards to brokerage notes?
Well, thank you for that. Definitely, Dixon Tech is one of them. Investec has actually hiked the target price to 16,200 rupees per share. And they are making three important points. They feel that currently the mobile sales, which has actually fallen off the cliff because of higher memory prices, have actually started to stabilize, is what their conversations with dealers are indicating. Customers are also willing to accept the higher prices right now. And the Chinese EMS companies, which had actually taken some share away from the Indian EMS companies, have actually started, that trend has started to reverse now. So very important takeaway, stocks up almost 7% now, and for the first time above that 13,000 mark ever since that fall from 18,000 all the way down to 10,000. So watch out for this. Despite this, there would be some EBITDA margin compression expectations in the first half. It is expected to be flat in terms of EBITDA margins, but H2 could see some recovery, and the Vivo JV continues to be one that we are monitoring. On BOFA, they've actually maintained a buy on APL Apollo. Stock's not reacting too much with a target price of 2170, but they feel that the company is best placed amongst the building material space, and the volume growth remains a key catalyst at this point of time. And third one is JP Morgan, maintaining a positive view on Chola Finance. They've actually upgraded it to an overweight from a neutral rating earlier, and hence stocks up almost 3.5%. Again, placed it in the positive catalyst watch, mentioning that growth reacceleration will be one of the bigger themes for the company at this point of time, with asset quality also being benign. And finally, they expect that there should be acceleration in FY27, with FY28 being one of the key ones where momentum will likely extend, and hence keeping a positive view on the counter.
Okay, interesting names there, Dixon Tech, Apollo Tubes and Chola Finance. In fact, the other space I want to talk about quickly is the defense stocks, because the Acquisition Council has been on Friday, cleared close to 52,000 crores in terms of defense proposals as well. So that entire sector is seeing some bit of a buzz. If you have names like HL, Paras Defense, BDL, BEL. Siddharth, any view on this? Because of 52,000 crore proposal that has been approved so far. And this will be with regards to anti-drone and electronic warfare, missile systems, mine and surveillance tech, and fixed-wing high-altitude pseudo-satellites. Who could be the beneficiaries according to you, and any buy recommendations there?
quickly, if I have to say, defense is a structurally growth phase. There is a sustained capital expenditure in India, faster procurement, rising indigenization, as well as increasing defense preparedness. So the recent approval only reaffirms this trend, and approvals worth 52,000 crores across air defense systems, anti-drones, electronic warfare, missiles. I think this has only further expanded the sector's opportunity as well as the pipeline. We have also seen a lot of large as well as small private sector players benefiting out of this growth story. Nonetheless, right now, what we like, Bharat Electronics, which is the largest defense player in India, highest order backlog, consistent execution. Plus, we also like Bharat Dynamics, which is a large player in the Indian missile technology. We have the Indian Prime Minister now going out in some of the foreign country visits where there is a likelihood of some of the deals for BrahMos with the Indonesian government as well. I think that a consistent exports opportunity apart from the domestic procurement is a structural story that continues to benefit the Indian defense sector.
Right, Siddharth, on that note, thank you so much for taking the time. So too, Osho, thank you so much for speaking to us on India Market Close. We're winding down, the last couple of minutes to go, and let's take a look at the intraday chart for the Nifty 50 as we wind things down. We're holding above that 24,400 mark. In fact,
I like that recovery from that dip, when we started off. Yeah,
not too far from the high point of the day. And in fact, pull up the heat map for the Nifty 50. I guess you will see a more or less even Stevens between the advances and the declines. There you go, more or less. Shade above.
It's in favor of the advances to an extent, but the catch-up again is coming in from the likes of a couple of your, not major, it's the same companies in a way.
It is the same companies.
Your HDFC is still there, your Kotak is still seeing cuts of around 4%, your hospitals are still slightly under pressure. I think it's your Apollo Hospitals which has played a catch-up now turned into the positive.
Reliance Industries has moved up just a tad bit.
So and you have the Apollo Hospitals which has turned positive right now, which was in one of the top 10 losing counters as well. But this is a very interesting picture. See the recovery even for that matter in Infosys. It was one of the top losers there. It's now seeing marginal cuts of around 0.3%. So some bit of a recovery coming in on that front as well.
In fact, pull up the intraday chart for the Nifty IT just to see whether that is visible on the screen when you look at it. And it is indeed just a tad bit. There you go. So pull up the stocks that I call about right now, right? So pull up TCS, pull up an Infosys, pull up an HCL Tech quickly, one after the other.
No, if we can just have the intraday chart, because the recovery is what we need to see over here.
If that is visible when you pull those up, there you go. It's Infi that is very close to the flat line. TCS, HCL Tech as well. They've bounced back just a tad bit from the low point. So there is buying, not necessarily for TCS.
Infosys is the one which is leading, that bounce back as we see right now.
Correct.
Let's look at the contributors chart as well, because the contributors chart will actually tell you in terms of Nifty 50 from that 100 points that we saw in HDFC Bank that has come off slightly. Reliance, as Alex was mentioning, has climbed a bit. ICICI Bank has also climbed a tad bit over here along with an M&M. And you have TCS which is over there. Infosys has come out of the contributors in terms of the losses. So this is an interesting picture. Broader markets and the advanced decline ratio. Let's see if anything changes on the advanced decline ratio as well. Broader markets, you're at the day's highs nearly in terms of mid-cap 150. So you know that churn has happened over there. And the small cap 250 as well. There you go, at the day's highest levels.
So we're ending at the high point of the day.
Which is very encouraging.
Pull up the advanced decline ratio that Hiral was just talking about. I won't be surprised to say that you will see a closing of the gap, at least a little bit. We've not once again had the advances crossover. But actually, if you think about it, there'll be a few stocks with a slightly higher weightages, even in the broader markets that have actually pulled the index forward, while the advanced decline ratio continues to favor the decline.
Let's look at the sectoral heat map as well before we just close off, because in terms of individual sectors, you had real estate, which was the top gaining, which continues to be there, consumption, auto, oil and gas. On the losing side, see, look at IT.
PSU banks.
It's come off. Your PSU banks, again, that in fact the losses have widened in terms of the PSU bank index, 0.8% higher. Your healthcare, which was absolutely on the borderline, is now positive 0.2%. There's some recovery coming in there as well. I think this is a very interesting picture that I'm seeing right now.
It is. But we're completely out of time. From Hiral and myself and the team that put this show together, from the NDTV Profit Suzlon studio, thanks so much for tuning in. This is NDTV Profit.
Brought to you by the all-new YONO, power to every Indian.
Hello and welcome to NDTV Profit. You are tuned into Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Let's take a look at the top headlines. Bitcoin above $63,000 mark on a macro-driven rally. UK FCA finalizes crypto QCA-TP framework. DTCC starts tokenized securities trading pilot. And Bitcoin ETFs sees $221 million of inflow. Now let's focus on the crypto basics. Today the topic is the golden rules for crypto safety. Now remember, crypto has become a part of many investment portfolios, but just like any other asset class, investing safely is as important as investing wisely. Now, if you are considering a crypto as a long-term investment, here are a few golden rules every investor should remember. The first rule, it's simple. Invest what fits your financial plan. Crypto is a high-risk, high-reward asset class, and it should complement your portfolio, not become your entire portfolio. Never invest money which is meant for essentials or emergencies. Second, think long term, not overnight gains. Chasing viral coins or investigating because of social media hype often leads to poor decisions. Now, successful investing is built on discipline, not on FOMO, which is fear of missing out. Third, research before you invest. Understand what you are buying. Ask yourself, what problem does this project solve? Does it have a real-world utility? And who is building it? If you can't explain why own an asset, you probably need to learn more before investing. Fourth, diversify your investment. Just as you wouldn't put all your money into one single stock, and also avoid concentrating your crypto investments in just one asset. Diversification helps manage risk. And finally, review your portfolio periodically instead of reacting to every price movement. Markets will always fluctuate. Short-term volatility is normal, but emotional decisions often do more harm than market movements themselves. Now, crypto can play a role in diversified investment portfolio, but like every asset class, it rewards the informed, patient, and disciplined investors, not the impulsive ones. And the safest investment strategy is one backed by knowledge, realistic expectations, and a long-term perspective. Now, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with in-house expert to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी.
कुछ तो बात है इस दिल में. P-Mark, the mustard specialist since 1933. सरसों से सरसों.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems
Good evening, you're watching Market Express with me, Shreyansi Singh, and this is the show that's going to get you a lowdown in terms of everything that has happened in today's trading session. But let's get straight into the show and start chatting about markets as well, because you do have Indian equity benchmarks that ended the session near the day's high, with the Nifty in fact closing above the 24,400 mark, very much so, firmly above that mark as well. And when you talk about Sensex as well, surged more than 500 points as well, supported by broad-based buying across key sectors. And speaking of sectors, then let's talk about most sectoral indices really ending in the positive territory as well. You do have realty and auto, the stocks that were leading the gains as well. On the flip side, something like media, public sector banks that did underperform just a tad bit, closed in the red as well. Let's also move on and talk about defense counters that were back in demand as well after the Defense Acquisition Council approved capital acquisition proposals worth about 52,000 crore rupees. Something like a Zentech or even Paris Defense buzzing away in trade, 6% uptick coming in for the Zentech, and even Paris Defense in great shape at close as well. And throughout the course of the day, something like a Dynamic Technologies, Unimec Aerospace also gained up to 6% thereabout. Investors really cheered the government's push to strengthen domestic military capabilities, and the approved proposals, mind you, cover advanced air defense systems, anti-drone technologies, surveillance platforms, and other next-generation equipment. The move, in fact, is expected to provide a fresh boost coming in to India's defense manufacturing ecosystem and order pipeline, and of course, the stocks today in trade. Let's also move on and talk about India's passenger vehicle market that accelerated sharply in the month of June, with retail car sales also rising nearly 29% on a year-on-year basis to a record monthly high. And the biggest highlight here was the growing shift towards cleaner mobility, with electric vehicles, hybrids, or for that matter even CNG models together accounting for a record 40.4% of total passenger vehicle sales. Now, when you talk about this particular surge as well, it was largely driven by strong rural demand as well as consumers increasingly opting for some of those vehicles with lower running costs. Moving on then, let's talk about Senco Gold shares that rose as much as 6% thereabout, and it did give up most of its gains towards the end of the session. But the company did report a strong business update coming in for the June quarter, something that really had the stock buzzing away in the first half of trade. Total revenue surged nearly 60% on a year-on-year basis, driven by robust festive demand, healthy same-store sales, and continued expansion of its retail network. When you talk about the jewelry retailer, they've also opened 8 new showrooms during the quarter and remains on track as well to add 12 to 15 more this financial year as well. Let's move on and talk about Godrej Consumer Products that was in focus as well, as after a strong June quarter also coming in, and you do have about a 2% uptick coming in on this particular counter as well. JM Financial in fact raised the target price here, and the brokerage is also seeing up to 17% upside, citing better than expected revenue growth and strong volume performance, and that's across both domestic as well as international markets. While input cost pressures may really weigh on the margins in the near term, analysts do believe that the company's growth momentum still remains intact. Moving on then, let's talk about some of the banking counters that were in focus, and it's HDFC Bank that makes it to the top of the list as well, because you do have the lender that reported a strong business update coming in, 3.5% uptick coming in. For something like an HDFC Bank, not every day that you see this happening, because right now you did have the gross advances that grew about 15.4% on a year-on-year basis to somewhere close to 30 lakh crore rupees. Deposits as well rose about 14.7% to 31.7 lakh crore rupees, reflecting that healthy momentum in both lending and deposit mobilization that had the stock buzzing away in trade. Let's move on and talk about Nykaa shares that climbed to a fresh 52-week high, and look at that 1% gain also coming in thereabout. It's the milestone that is the devil is in the detail in terms of the milestone there. So a fresh 52-week high coming in for Nykaa after the company issued an upbeat business update for the June quarter. The beauty and fashion retailer, in fact, expects consolidated net revenue growth of around 30% on a year-on-year basis, and that's driven by continued strength coming in the beauty business, a recovery in the fashion segment as well. And you do have, following this particular update, JM Financial really reiterating its buy rating. So a bullish call coming in for this counter as well, saying that the company's growth momentum really remains strong. Let's move on and talk about Radico Khaitan shares that gained over 5% to hit a fresh record high as well. So close to that 5.5% gain also coming in, extending their strong rally this year. Now the stock has surged nearly 64%, mind you, from its March lows, driven by optimism coming in over premiumization, robust demand for premium spirits, and healthy earnings growth. But in terms of the analyst forecast as well, you do have analysts that remain positive on the liquor maker, citing an improving product mix, strong brand portfolio, and sustained margin expansion. Moving on then, let's talk about Investec that reiterated its buy rating on Dixon Technologies while raising its target price to 16,200 rupees from 14,500 rupees as well. And the brokerage is really saying that mobile demand is stabilizing, with customers really accepting higher prices. Also sees Chinese electronics manufacturing players losing market share to some of their Indian peers as well. And despite the expiry of the PLI scheme, Investec expects stable first half earnings, followed by strong growth from the second half of FY27. Moving on then, let's talk about Bank of America that maintained its buy rating on APL Apollo Tubes with a target price of close to 2,100 rupees. Brokerage believes that the company is well positioned to benefit from the long-term growth story when it comes to steel and building materials. BofA also sees a pickup coming in the volume growth, and that is something that they're highlighting as a key near-term catalyst as well, with return ratios potentially doubling and further scope for valuation expansion. Moving on then, let's talk about JP Morgan also upgrading Cholamandalam Investment and Finance to overweight from the previous neutral rating, raising their target price as well to somewhere close to 2,000 rupees. And the brokerage is also placing the stock on a positive catalyst watch, citing broad-based growth acceleration, improving asset quality, and lower credit costs. Now, JP Morgan, in fact, is expecting the momentum to continue, and that's through FY28 with further earnings upgrades and scope for valuation re-rating that makes it to their radar. Moving on then, let's get you some business news. Then Union Corporation Minister Amit Shah has announced plans to set up a cooperative life insurance company to strengthen India's cooperative system. Speaking on the 5th Foundation Day of the Ministry of Corporation, you do have Shah saying that the move is going to be helping expand cooperatives into the insurance sector, building on initiatives like Bharat Taxis. Also highlighted reforms including a national cooperative database, a new Sehkari University in the state of Gujarat, and saying that the sector with over 8.5 lakh cooperatives and somewhere close to 30 crore members is going to be playing a pivotal role in achieving the Viksit Bharat vision by 2047. On to some national news then. Relentless monsoon rains continue to disrupt life across Maharashtra. A major landslide near the missing link section of the Mumbai-Pune Expressway has forced the closure of a crucial stretch after debris blocked the Pune to Mumbai carriageway near Khandala as well. And you do have authorities that have diverted traffic, issued a travel advisory, as well as heavy rainfall continues to impact road connectivity, and that's across the region. And speaking of the region, then let's talk about Maharashtra that continues to battle relentless monsoon rainfall, like I mentioned, with authorities warning that disruptions could persist as more heavy showers are forecast. You do have the IMD that has issued a red alert, and that's for Mumbai, Thane and Raigad. As intense rain and strong winds impact normal life, these 16 trains have been cancelled and 9 diverted, while record rainfall has been recorded in Mumbai, Palghar and Raigad as well. And the state has also reported 13 rain-related deaths over the past 3 to 4 days. That's the word coming in from a minister as well, and the emergency agencies in fact remain on high alert. Speaking of high alert, then let's talk about authorities that have closed all tourist destinations in Triambakeshwar and Nashik until further orders after the IMD issued a red alert for heavy rainfall. Popular spots including Dugarwadi, Harihar Fort and Pahine has been declared off limits as a precautionary measure. In fact, officials have also urged people to avoid travel to the region until weather conditions improve. Moving on then, let's talk about a major breakthrough coming in when it comes to the National Capital's Police's Intelligence, Fusion and Strategic Operations Unit that has busted an interstate cyber forgery racket allegedly involved in making and selling fake government identity documents online. You do have 2 accused that have been arrested. Investigators are saying that the network used as a website to supply forged Aadhaar, voter ID, PAN and other certificates that closely resemble genuine documents and could have been misused for identity theft, financial fraud and impersonation. Moving on then, let's talk about India hosting the 2-day BRICS ahead of anti-drug agencies meeting in Guwahati as well, bringing together member nations to strengthen the fight against narcotics trafficking organized by the Narcotics Control Bureau as well. The meeting is going to be focusing on combating synthetic drugs and even enhancing intelligence sharing, improving operational coordination and building stronger institutional cooperation among BRICS countries to tackle emerging drug threats. On to international news then. Thousands of mourners have gathered on the streets of Tehran as Iran holds the main funeral procession for former Supreme Leader Ayatollah Ali Khamenei as well, and the highly choreographed ceremony is being presented by Iran's new leadership as a show of unity, strength and resistance following Khamenei's death in US-Israeli airstrikes in February as well. His son Mujtaba Khamenei has been named his successor but has yet to appear publicly. Khamenei will be laid to rest in Mashhad on Thursday, while a fragile US-Iran ceasefire still remains in place as peace talks continue. Moving on then, at least 19 people have been killed and more than 100 unfortunately injured after violence erupted at a prison in Sri Lanka's Negombo town, north of the capital as well, and the clashes began on Sunday, continued into Monday, prompting a major security response coming in. Authorities, in fact, are yet to provide detailed information on what triggered the deadly unrest. Let's also move on and talk about China's military that has test-fired a missile from a nuclear-powered submarine into the Pacific in a move that has raised regional security tensions. According to state media, the missile carrying a dummy warhead was launched into international waters. Japan, Australia and New Zealand have expressed concern already over Beijing's expanding military reach and the potential impact on regional stability. A historic impeachment trial, in fact, has begun in the Philippines, where the Senate will decide the political future of the vice president of the country. She faces charges of corruption and allegedly threatening to have president also assassinated, allegations that she has, of course, vehemently denied, calling them politically motivated. Thousands of police have been deployed around the Senate amid fears of unrest. A two-thirds Senate majority is needed to convict her, which would remove her from office and bar her from contesting the 2028 presidential election. Moving on then, let's talk about a massive wildfire that continues to burn out of control in southwestern France, forcing the evacuation of around 10,000 people from nearly 24 towns and villages near the Spanish border. Let's talk about the blaze as well that has scorched thousands of hectares. Strong winds threatening to worsen conditions right now. Authorities have restricted the access to part of the Tour de France as well route, and also to support firefighting efforts right now. You do have officials in Spain that say that the fire on their side, though, is stable. Moving on to the world of sports now. FIFA is facing fresh controversy after overturning the one-match World Cup suspension of United States striker Folarin Balogun as well. And the decision is coming in after reports that US President Trump urged FIFA to review the ban, calling it, and I quote him here, a great injustice. Now, the player has now been cleared to play in the United States round of 16 clash against Belgium. However, Belgium is set to appeal the decision, raising fresh questions over FIFA's disciplinary process and possible political influence on football's biggest stage. Let's talk about Brazil's dream of a record 6th World Cup title that is now over. The five-time champions crashed out after a 2-1 defeat to Norway, with Erling Haaland also scoring twice late in the game to send the team into the quarterfinals for the first time. Brazil were left to missed chances, including a first-half penalty from Bruno Guimaraes as well, and a golden opportunity that was squandered by Endrick. Neymar pulled one back from the spot in stoppage time, but it proved too little too late as Brazil suffered their earliest World Cup exit since 1990. And Brazil captain Neymar has announced his retirement from international football following the team's World Cup exit. The 34-year-old said it's over now, and I quote him here, bringing an end to glittering journey with the Selecao. And Neymar, in fact, retires as Brazil's all-time leading goal scorer and one of the country's most decorated players, having represented the national team for well over a decade. His decision marks the end of an era for Brazilian football. England are through to the World Cup quarterfinals after a dramatic 3-2 victory over co-hosts Mexico in one of the tournament's really most thrilling matches. You do have Jude Bellingham starring with a stunning first-half brace, while Harry Kane also added another from the penalty spot. The Three Lions were reduced to 10 men after Jarrell Quansah also was sent off, but produced a determined defensive display to really hold off Mexico's late fight back. England will now face Norway in the last 8 as their World Cup dream stays alive. And with that, it's a wrap on this edition of Market Express. Thank you so much for tuning in.
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a meeting of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jewelry. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी। ये आपके लिए।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
India's unshakable news habit. NDTV.com is India's #1 English news website.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
These are kind of awards.
Benchmarks ended the session near the day's high, with the Nifty closing above 24,400 mark, while the Sensex surged more than 500 points, as this has been supported by broad-based buying across the key sectors. Banking and NBFC business updates were mixed. HDFC Bank's loan growth outpaced deposits. Bank of Maharashtra reported strong advance growth, while Satin Credit Care delivered robust disbursement growth along with lower funding costs. Monsoon mayhem continues in Mumbai. At least 13 died in 4 days amid incessant rainfall. IMD issues red alert. On the positive side, rainfall deficit has shrunk to 24%, while reservoir level sees a healthy improvement. NDTV Profit has learned that the government is exploring several avenues to divest its stake in LIC. Sources say a QIP and FPO and other options are under consideration besides an OFS. The National Stock Exchange of India is set to begin global investor meetings next week for its IPO, which aims to raise nearly $3 billion. NSE is targeting a listing in second half of September. US Department of Justice defends its decision to abandon the criminal case against Gautam Adani and 7 others, urges judge to drop charges permanently. US Department of Justice says that Adani case should never have been brought. PM Modi begins a 3-nation tour visiting Indonesia, Australia and New Zealand with a focus on deepening economic ties, strengthening strategic cooperation and expanding partnerships across the Indo-Pacific region. Hello and welcome. This is Profit 360 on NDTV Profit and I'm Himakshi Bahugna. Along the next half an hour, we'll bring you the latest from the markets as well as national and international news. And viewers, let's look at how the markets have really fared today first. So it was another positive day for Dalal Street with benchmark indices extending their winning streak to a 4th straight session. Nifty has settled above the 24,430 mark, while the Sensex has gained over 520 points. And this has been led by strong buying in the banking stocks, with HDFC Bank among the top gainers. Let's now bring in my colleague Jasmeet for a detailed market roundup.
Well, a good day for markets today. Nifty 50 ends in green and gains about 0.58%. Well, in terms of top gainers in Nifty 50, we have stocks like Hindalco and HDFC Bank, both gaining over 3%. When we look at the broader market, while that underperforms the benchmark in today's trade, mid-cap 150 and small-cap 250 both end in green and gains about 0.3%. While in terms of top gainers in mid-cap 150, we have stocks like Dixon Technology and Hitachi Energy, both gaining the most in mid-cap 150. While in small-cap 250, we have stocks like Aegis Vopak and Swarm Corporation, both gaining the most. When we look at the sectors, well, all sectors end on a positive note, end in green, barring Nifty ITI and Nifty PSU banks. Well, Nifty Realty emerges as a top gaining sector in today's trade and gains about 2%. While in terms of top gainers in Nifty Realty, we have stocks like Brigade Enterprise and Loza Developers, both gaining the most. While Brigade Enterprise is up nearly 4.58% and Loza Developers gains about 3.58%. When we look at the broader market, we have Nifty PSU Bank as a top losing sector in today's trade, which is down about 1%. While in terms of top losers in Nifty PSU Bank, we have stocks like Bank of India and Bank of Maharashtra, both losing about 2.58%. Now, in terms of the key trends in today's market, we do note that Nifty PSU Bank is down for the 3rd consecutive day. We do see an extended pressure for Nifty PSU Bank, while Nifty IT snaps its 2 days of gaining streak, which we saw in the previous week, and ends in red in current week in today's trade. We look at the other key segments. We do note Nifty FMCG, Nifty Financial Services are up for the 4th consecutive day, while Nifty Pharma, Nifty Metal are up for the 3rd consecutive day. And lastly, Nifty Oil and Gas, Nifty Realty are up for the 5th consecutive day compared to today's trade.
Thank you so much, Jasmeet, for that. In fact, we also spoke to Mihir Vora, CIO at Trust Mutual Fund, who believes that the market is building a strong base as domestic liquidity continues to provide support. And he's also said that the worst of FII, pessimism appears to be over, while also lower oil prices and any sort of shift in the FII positioning could really provide a fresh boost to Indian equities. Let's listen into his commentary.
There is a good base forming for the market. The March quarter results we have already discussed were quite good. Oil prices have come down. The AI, most importantly, I think the AI themes seems to be, rationalizing a little bit. And my view is that even if FIIs start to get neutral on India from their current underweight position, that can mean a lot of inflows into the country. So this $30-40 billion of outflows that we have seen, even if they become zero, I think the domestic liquidity is there to take care of the rest of the market. But if it becomes positive, then even a little bit of buying can lead to a sharp rally in the market.
And we are talking about the banking space. So private banking giants have delivered a mixed start to the FY27. HDFC Bank has stood out with a stronger business update, while Axis Bank and Kotak Mahindra, they've reported broadly in line growth. And it's been a mixed bag for Bank of Maharashtra. My colleague Sharad is now joining us with more details on this.
HDFC Bank, we are at the day's high level. It's up more than 3%. A very strong update coming in, and analysts suggest that an important overhang in the stock might be over, suggesting a further up move. Gross advances have done well. The credit growth has outpaced the deposit growth, and by definition, this is definitely a good sign as well. CASA deposit growth remains stable. Overhand, also you look at Kotak Mahindra Bank, mixed set of numbers. That's why a little bit of selling pressure coming in. Couple of overhang also there in the bank itself. Of course, this is not the numbers related. The CASA deposit pace is lagging with the deposit growth. This indicates pressure, especially on the low cost deposits, and that is why we are seeing a sell-off happening on the other side of this counter. But talking about fresh banking updates, we have Bank of Maharashtra, where they have given mixed trends coming in. The advances globally has gone up 27%. The CASA ratio, minor degrowth coming in, but this is an industry-wide phenomenon largely, to be honest. And Satin Credit, it's from the BFSI space. The marginal cost of borrowing has reduced, but the disbursements and AUM have been pretty strong. So overall, a strong operational update coming in for Satin Credit Care.
Right. Thank you so much, Sharad, for that. In fact, we are getting an exclusive update now, viewers. Cult Fit, they are to file DRHP for 5,000 crore IPO today. An IPO to consist of fresh issue and offer for sale. And it's likely to be 4,000 crore. And for more, I'm being joined by my colleague Nimit Dixit. Nimit, over to you.
Yes, the Bangalore-based wellness and fitness brand Cult Fit is looking to increase its own fitness now. It's going to be filing its DRHP with the SEBI today. Sources tell us that this is going to overall be an issue size of about 5,000 crore. 4,000 crore of this will be an offer for sale by existing investors. Remember, its existing investors include Temasek, Zomato, Excel, etc. And Temasek just increased their share to 12% earlier this year, with a $47 million fundraise. Now, the rest of it, the 950 crores, is coming from a fresh issue by the company. We also understand from sources, and this will be put out in the DRHP also, that there is a pre-IPO round that is being planned, an additional fundraise before the IPO, and any amount raised there will then be deducted from the fresh issue size. So those numbers are still in the air. We're still very early right now, but we expect the filing to go through today. Remember, the overall issue size valuation is subject to change depending on when they list the market volatility and deliberations.
Right. Thank you so much, Nimit, for gathering those exclusive details on this IPO. And they are to file DRHP. Cult Fit is to file a DRHP soon today. And viewers, moving on, Maharashtra continues to battle the fury of the monsoon, with heavy rains causing widespread devastation across the state. Relentless rainfall in Maharashtra has triggered a major landslide in Maharashtra's Pune district early on Monday today, and killing 3 members of a family after several houses were buried under debris, and also disrupting traffic on both the Mumbai-Pune Expressway and even the old Mumbai-Pune Highway. So in Mumbai, 6 people have lost their lives after a building has collapsed in Mankurd amid relentless rainfall, with also key transport links affected and also rescue efforts being underway. Chief Minister Devendra Fadnavis has chaired a high-level review meeting to assess the situation and also coordinate relief measures across the rain-hit regions. But there's a positive update as well. So as rainfall deficit has narrowed to 24% and reservoir levels have improved, listen in to Mahesh Palavat, VP Meteorology of SkyMet, and to his remarks to what he had to say on this.
We have seen the deficiency of 40% by end of June, and now within 5 days, the deficiency has reduced to 23% or 24%. What we should keep in mind that daily average in July is also has to be surpassed by the daily rain to bring down the deficiency of June. So rains are very good over many parts of Gujarat, Maharashtra, Karnataka, Kerala, interior Karnataka, and Odisha, because due to the depression.
In fact, we are now being joined by our correspondent Saurabh Gupta with the latest on the heavy rains in Mumbai.
Well, it continues to rain, and of course, that's probably one of the reasons why the BMC, the civic body of Mumbai, has issued an advisory asking people to stay home. Behind me is, of course, the Mumbai's most arterial road, which is the Western Express Highway, which leads to the northern suburbs of the city, and that's where most of the impact of the rains are being felt. Vasai, Virar, Palghar district is seeing a lot of heavy rainfall. And the Western Railway services in that part of the city have been affected. Now, while Mumbai continues to be battered by heavy rain, many would argue that this is a relief given the fact that we were staring at an abnormally low monsoon which could have had its own set of problems. This rain even though it continues to batter the city, is making up for the lost monsoon in June. It was greatly delayed, and therefore many would see this as welcome. However, for a city like Mumbai, the financial capital of the country, disruption due to rain continues to cause havoc, and of course also continues to disrupt normal life, leading to losses as well, because there are loss of man-days and people cannot get to work. So all of that is there, notwithstanding the fact that the rains are of course welcome. And obviously Mumbaikars need the rains, so to speak, because the reservoir levels also are low, but the rain continues to pound Mumbai. Low-lying areas continue to report some waterlogging. The BMC and the Weather Department have issued advisories for citizens.
Thank you so much, Saurabh, for that. And switching gears now, viewers, the government is stepping up preparations for the next phase of its LIC stake sale. Now, sources tell NDTV Profit that multiple divestment options are under consideration, including a QIP, FPO, and even other routes. So, with no final decision yet been made, my colleague Shrimi has all the details with her.
Yeah, that's right. The government is keeping its option open for the next round of stake dilution in LIC, with officially evaluating multiple fundraising route instead of committing to an offer for sales, as we seen in the lots of PSUs recently. And according to sources, the centre is considering mix of option, including a qualified institutional placement, that is QIP, a follow-on public offer, FPOs, and other available SEBI mechanism. But no final decision has been taken on which route they will opt for. But they are stressing the fact that OFS is not the only option on the table, as the way we are seeing, the government move recently. Now, it follows an extensive investor outreach program with road shows held across Mumbai, Singapore, UK and US. Official says that response from both domestic and global investors has been quite encouraging, giving, of course, the greater confidence as it prepares for the next phase of LIC stake sale. Now, the size of stake sale, however, is yet to be decided. Sources says that the government wants to calibrate the offering based on the market appetite and the prevailing market condition, etc. But somewhere we are getting the indication at this point that it could be in the range of 1.5 to 2% stake dilution. The government is aiming to do this transaction in the ongoing second quarter itself, but do note that the proposed sale would mark the government's first stake dilution in LIC since its landmark IPO in May 2022, when it sold a 3.5% stake in the insurer. And the centre currently holds 96.5% stake in LIC and has until May 2032 to be gradually bring its holding down to 75% to meet the minimum public shareholding now as per the current rules.
Right. Thank you so much, Shrimi, for gathering us those details there. And in fact, viewers, India's biggest IPO could be entering its final stretch now. Sources are telling NDTV Profit that the NSE is set to begin global investor roadshows from July 17 ahead of its proposed $3 billion public issue. Now, meetings are planned with investors across the US, London, Singapore, Hong Kong, the Middle East, and even India, as the exchange looks to gauge demand. Now, sources are also saying that the NSE is targeting a listing in the second half of September and is also working towards a 5 lakh crore valuation. However, the final issue size, valuation, and even the timing will depend on the investor feedback and also the prevailing market conditions. And viewers, moving on, the US Department of Justice has urged a federal judge to permanently dismiss the criminal indictment against the Adani Group and also its executives. Now, the case unsealed last year alleged bribery and securities fraud linked to an alleged solar power contract scheme in India. Now, the DOJ, that is the Department of Justice, now says that the prosecution was legally flawed, did not align with the administration's enforcement priorities, and even should never have been brought in the very first place. So let's now take a closer look at how the case has unfolded so far. And my colleague Nimit is joining us to take us through the timeline of the events.
If the timeline we look at, it started in about October 2024, where the grand jury indictment was filed under seal. Now, on November 20, this indictment is unsealed for the whole world to see, and there was a bunch of different charges that were brought forth. Along with this, the SEC also initiated a parallel civil enforcement case. Now, this means a bunch of different US prosecutors started going after Adani. Now, the next year in 2025 was spent by Adani and Gautam Adani and Sagar Adani in defending these challenges to jurisdictions. They said that there was no real case here, it was an Indian case, and denied all allegations. Then the SEC in Jan 2026 sought India's assistance in serving summons on the Adani Group and Gautam Adani. But what followed there was when the matter really turned. India's investigation in early 2026 reported that there was no actionable misconduct on the part of the Adani Group or any of the other people mentioned there. Now in April 2026, this is where the turn of this matter started. The Adanis moved first to dismiss the SEC case, which was a civil enforcement case. Along with this, in May 2026, the Department of Justice itself, like Alex just said, moved to dismiss the criminal indictment on its own. Now in May 2026, also the SEC, which was moved earlier, settled the case with the Gautam and Sagar Aghani for an amount, and that case was closed there. Then Judge Garofis ruled on the Department of Justice's plea to close the case and demanded detailed dismissal explanation. Now the DOJ on July 4th, which we just discussed, filed an extraordinary 10-page defense of its dismissal, saying that the Adani Group actually did not commit any wrong here, and this was a wrong investigation and need not have started to begin with. Now the next step here is the July 13th date, which the judge is to decide whether to grant this dismissal order.
Right. Thank you so much, Nimit, for that. In fact, going forward, legal experts share key insights as the DOJ seeks permanent dismissal of case against Gautam Adani. And then we'll get some detailed perspective from Benjamin, who's the partner at Walmart Meher, and on whether the DOJ's latest submission adequately addresses the court's concerns. Let's listen in.
DOJ's response was strong. I don't think it's that unusual in these circumstances that the Department of Justice tries to provide clarity so that the judge understands the basis for it, particularly when there have been unfair allegations of partial treatment and that sort of thing. And so I thought it was an appropriate response. And now the judge's responsibility is clear. I mean, let's face it, the only possible decision here is dismissal. So that's clearly still the finish line here.
I think that when one steps back and analyzes what's happened, one has to understand that first, the department is taking an important step of dismissing an indictment, which no administration does lightly. And in that context, the court has properly asked for an explanation. And I think the most important thing is DOJ has provided a fairly detailed explanation of multiple reasons why they believe that it is in the public interest to dismiss this indictment. Both legal reasons, policy reasons, procedural reasons, and they've laid that all out.
So from my perspective, the additional detail that the Department of Justice has shared with the court should be sufficient to satisfy the court that this is being dismissed for an appropriate reason under the rule that we were just talking about. It does provide additional detail on challenges that the case has from a legal perspective, challenges that the case has from an evidentiary perspective. I don't know what this judge will do, but given how limited the role is of the court here, I would imagine that this will suffice for the court's reasons.
All right, viewers, let's shift our focus to Tesla now, which is turning more optimistic about its India journey. Sources are telling exclusively to NDTV Profit that the company is seeing encouraging demand for its Model Y L, with bookings already in the high triple digits. Let's go across to my colleague Danish, who's joining us with more details on this.
Well, that's correct. Tesla remains to be very bullish on the Indian market. Despite this, we are seeing that when the company had launched its operations in India, it's been almost 1 year, and initially the company was seeing very slow pace of sales. And if we talk about the calendar, like when Tesla entered the Indian market last year in July, since then till now, the company has sold cumulatively 468 cars. And in fact, in the last year, the company had sold around 226 cars. And till now, if we look at today's date, till now the company has passed over 239 deliveries, so which clearly we can see that the demand momentum for Tesla in India is there. And besides that, we are also seeing that recently the company had launched Model YL, which is a 6-seater car by the company, and for that sources are telling us that the company is seeing a very sharp demand and a very good demand. Sources say that as of now they have received a lot of queries for the cars, and as far as the bookings are concerned, that is somewhere in the high triple digits. So they are very bullish at the moment. As of now, Tesla India is not chasing any particular market share. Their main intention right now is to slowly expand in different cities across the country. As of now, Tesla is selling its cars in 4 Indian cities, and in the coming few months we can expect that the company will be opening more and more showrooms in the country. Besides that, sources also telling us that if we look at the overall sales, if we compare this with other companies, although the growth of the company might look slow, but if we compare Tesla with the other companies that are present in the country, Tesla right now is operating in a very minimalistic kind of way, with presence across these 4 Indian cities. And as the demand increases in the coming few months and coming few years, Tesla is all set to expand to more and more cities across the country. So all in all, if we see, Tesla India is pretty much bullish about the Indian market, and especially with the launch of Model YL, the company expects to gain some more market share in the country.
Adarsh, for getting us those details. And viewers, even as Tesla continues to build its presence in India, the EV maker is expanding its charging network. The company has inaugurated its first mall-based supercharger at Saket in Delhi, marking another step, in its India rollout. And Danish had covered this event earlier today. Let's have a look at that report.
Well, Elon Musk on Tesla is slowly but steadily expanding its presence in the country, and now the company has inaugurated another set of chargers at the Select City Walk Mall in the national capital, and that's where NDTV Profit is reporting from. So now Select City Walk has become one of those destinations across India which houses a certain number of Tesla chargers, and this is the first set of destination chargers in North India that the company today has inaugurated at the Select City Walk Mall. So if we look at the overall number of chargers, there are 6 destination chargers that are present at this location, and the main idea of setting up destination chargers inside a shopping mall is the fact that people, especially the Tesla users that come to the mall to shop or to watch a movie, they can now come to this particular mall, and they can also charge their cars while they're busy inside the mall. And if we look at the overall number of the charging infra that the company has spread across the country, so now there are 6 charging stations across India, and now the company has 20 superchargers and 20 destination chargers that it is offering to its users. If we talk about specifically Delhi, then now we can see that in the entire national capital, there are almost 13 chargers of Tesla that are available. Out of that, there are 4 superchargers, and now there are 9 superchargers that the company has. And if we look at the overall number of chargers that the company has, so now there are 20 superchargers and there are 20 destination chargers that are present at 6 different destinations across the country. While it is well and good that the company is slowly and rapidly expanding its charging infrastructure, but it's been almost a year since Tesla has been present in India, and in terms of sales, we are seeing that the company is facing a little bit of challenges because it is unable to secure the pole position that it enjoys in various other countries. So all in all, if we see, the company has inaugurated another set of chargers in the national capital, and now there are at least 40 Tesla chargers that are available in India.
And switching gears now, viewers, Laser Power and Infra is set to make its debut on Dalal Street, with the company looking to use IPO proceeds to drive its next phase of growth and even expand its business. So what does the post-listing roadmap look like, and where does the management see the biggest opportunities ahead? My colleague Ridhima Bhatnagar caught up with Deepak Goyal, Chairman and MD of Laser Power and Infra. Let's listen into that conversation.
Laser Power and Infra is a manufacturer of power cables and conductors and other products used in transmission and distribution of power, and the company also does EPC or your engineering, procurement and construction projects for infrastructure. Now, the company is coming up with its IPO, and joining me to talk about this is Deepak Goyal, who's the CMD of the company. Thank you for joining us on NDTV Profit.
Thank you.
A bit on the financials of the company. The revenue has shown a bit of a downtick by 9.5% in FY27, but the PAT has increased by 40%. So what's your guidance going forward for 1 year for the company, and also the view on how can the revenue be increased and the PAT can be maintained with this growth?
So if you look at our company's revenue growth from FY24 till FY26, you'll see it has grown from 1700 crores to approximately 2500 crores. And then there was some moderation in FY26. But that moderation was a deliberate choice. Now we are shifting more from commoditized products into special products. That is exactly the reason why you will see our EBITDA margins also growing. Our EBITDA margins were at about 8.9% in FY24, which increased to 9.7%, and gradually this year it has increased to almost 13%. So that clearly goes to show the company's shift towards products that are more value added rather than running after revenue.
Viewers, that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300 300
Hello and welcome to KYC. You're watching NDTV Profit with me, Sharad Dubey. This is the interesting show where we get you interesting stories, be it mid-cap, small caps, and even large caps. And today also I've got you a very interesting turnaround story. But try to guess it. I'm going to tell you anyways. This is the first state-owned bank of India. This is the first major hint I've given you. Second, if you're a student of history, you'll try to understand. The company was founded in the year 1938 by Maharaja Hari Singh. Very interesting history, right? I'm going to give you one more point. This is backed by Mukul Agrawal with almost 1.5% stake of him having in this bank. And also the stock has been outperforming all the banks. Nifty Bank, the stock is up 65% in 2026. Try to guess. State-owned bank. No, it's not Karnataka Bank. No, it's not Bank of Maharashtra. The company in focus in KYC is Jammu and Kashmir Bank, J&K Bank. Very interesting name, an interesting turnaround story. But why are we calling this bank right now? Of course, right now is a season of earnings. So Q1 operations is something we'll try to understand. How was the deposit? How was the CASA? Is there any divergence there? That's what we'll ask. Secondly, of course, this story will play out. And going ahead, is there any much more fizzle left in the rally for this turnaround? The non-Jammu Kashmir book and the expansion plans. It's a very interesting take. It has a book in Jammu Kashmir and a non-Jammu Kashmir bank. The NIMS guidance is pretty much interesting to understand for any bank, to be honest, and also the other operational parameters as well. These are the key questions we'll be asking. But there's, of course, the risk of higher credit cost. Does it impact on the recoveries or not? That's what we'll try to understand. And also the corporate agency tie-ups of recently, they have started with a lot of insurance companies tying up with the bank. So that becomes something to watch out for. And also, Amitabh Chatterjee will be answering all these queries and much more in our show. He's the MD and CEO of JK Bank. But let's try to understand. Of course, we'll go into a history also about the bank and what it actually stands for. The first, reason is it's founded in October 1st, 1938 under the letters which a patent was issued by Maharaja Hari Singh. That's a pretty interesting history to start with. Also, it's the first state-owned bank in India and it's headquartered in Srinagar in Jammu and Kashmir. Going at the story, it operates a very unique hybrid position. यानी कि ये प्राइवेट बैंक तो है ही, इसके साथ साथ स्टेट ओन्ड भी है. That's a very rare and a hybrid combo. The government of Jammu and Kashmir holds roughly 59.4% and it's a majority stake. Let's try to understand much more. It's an exclusive agent and designated by RBI to conduct businesses for Jammu Kashmir government and the institutions. So you could say it has a regional moat, but it's just not limited to Jammu Kashmir. Look at that. It's present across 18 states and 4 union territories. That is where their bank starts operating as well. It's backed by ace investor Mukul Agrawal having 1.5% stake. Rarely do we see investors, especially the astute investors, having stake in banks. 61% of advances come from the state of Jammu and Kashmir. This is the recent data I have taken from the fourth quarter FY26. But before that, remember, bank sounds very confusing, right? Don't worry, I'm here. Let's just understand. If you have a screenshot, maybe take these abbreviations or write it down. GNPA means gross net performing assets. Of course, lower the better. Let's try to understand the other key segments. Net interest income, the higher the better. If you're tracking this, these are the parameters when you track a banking company. ROE, return on equity, it's higher the better. Of course, ROA also comes in, but that is during our show. ROE and then return on assets as well. This is also higher the better. Also, let's look at the other abbreviation. That's the NIMS. That's the net interest margin. It's higher the better. And lastly, it's the CASA, which is the current accounts and savings accounts. Kiska jo hai ratio zyada aata hai. And higher the number, better it is. So we have understood what is banking 101, at least in the short forms. But the advances breakup, how does that look for a book in Jammu Kashmir? It looks pretty decent, but almost 35% comes from the SME segment and the corporate segment. So 70% का जो loan book है सिर्फ 2 कैटेगरी से आ रहा है. एक आपका SME से आ रहा है और दूसरा आपका corporate से आ रहा है. But it's evenly distributed. If you have a look at this, is the advances breakup coming in for Jammu Kashmir Bank. Let's understand the Q1 operational update. Largely the deposits have jumped 17% on a YOY basis. Also, let's look at the gross advances. That has done well. It's up 26%. So the operational parameter, at least for advances and deposits, looks strong. And the CASA ratio has dipped almost 363 bips on a year-on-year basis. So a little bit of concern is there, but ये पूरे industry में देखा जा रहा है. So definitely the company is moving with the industry at least. Recent news, 2 news flows, MOU with SBI Life and HDFC Life. I had explained to you earlier what was a corporate agency agreement. यानी कि दूसरे इंश्योरेंस के कंपनी से अपने बैंक के जरिए ये बेचते हैं. That's the entire perspective about it. RBI recently approved Kotak Mahindra banks for acquiring almost 9.99% stake in the bank. So this is pretty much interesting. But of course, remember, there are regulations coming in from RBI on that. But what may work for Jammu Kashmir Bank is the strong turnaround story which has played out, likely to play out ahead. That's what the people speak about in the street. More improvement expected in the operational numbers. That's something to watch out for, especially the return ratios. Does the magic continue or not for Jammu Kashmir Bank? Asset quality remains strong. We have seen that, and I'm going to get you all those numbers also, but you need to wait it out. Also, another reason why things might work out more is more institutional participation is expected. DIs and FIs might increase more stake. That's what my conversation with dealers suggest. So this is the reason what may work for the company, but wait, what may not work? Valuations are fairly expensive right now. Stock में जो है तेजी already बहुत देखने मिली है. Lack of analyst coverage. So this is a bit of concern. And because of that, we get companies like Jammu Kashmir Bank in KYC so that you, as an investor or stakeholder, get a good clarity. Also, the ECL transition impact, that's around 1600 to 1700 crore rupees. And for the size of the bank, of course, the PAT numbers will be impacted. Now, it depends. एक quarter में लेते हैं कि quarters में फैलाते हैं ये बात. And also the higher credit cost, which is led to increased slippages from books and lower recoveries. This is a concern raised by the brokerages also. And I read also the numbers do show this entire picture. But to get in more value in the picture in our analysis as KYC, I'm going to get you 8 rating parameters. And yes, for banking, some parameters are tweaked. I'm sure cash flows हम नहीं देखेंगे. यहाँ पे उसके जगह we'll see the operational parameters. There's just a small error on that. Largely, this is how things pan out, and return ratios also have twisted the return ratios. It's ROA and ROE here. Shareholding street kid, which you already know. Valuations we'll compare only with the history of the bank itself and the outlook on the industry as well. So this is the entire picture for the KYC ratings, but let's go into the income statement. That's the first one. Largely, it has improved the net interest income you need to take. And if you're wondering what the full form is, this is nothing but pre-provisional operational profit. Yani ki bank ka EBITDA, just simplified version. They have done well. FY25 to FY26, if you have a look, that's where we are seeing a good improvement also coming in. And long-term story, the one I spoke about, the turnaround story, has done well. So net, I'm going to give this a thumbs up as well. Balance sheet also, good improvement has happened. Of course, remember, most of the banks in India are well capitalized under the important RBI regulations as well as Basel norms. So look at the reserves, deposits and advances doing a really good jump coming in from FY25 and FY26 as well. Well capitalized, turnaround, and we are seeing that, of course, the improvement in the books as well. So net, it's a strong thumbs up from the balance sheet as well. So we spoke about income statement, we spoke about balance sheet, but let's get into deeper into the operating ratios where we judge the company. Of course, look at that. NIMs, net interest margins, that has been largely a little bit of pressure coming in. It's around 3.6%. But look at the GNPAs and the NNPAs. That is where we see a good kind of up move coming in. Up move as in, अगर these GNPA and NNPA के ratios कम आएंगे, तो asset quality बढ़ेगा या improve होगा. And look at that. That's what we have seen. GNPS from 4.1 to 2.5, NNPS from 0.8 to 0.6. So operationally, JK Bank has done well. Let's talk about return ratios. And for a bank, ROA and ROE, they are very much important, but they have been largely stable for the last 3 years. If you have a look for FY24, FY25 and FY26 as well. So Street is looking at the improvement of return ratios going ahead, and the way turnaround is happening, it's likely to come in a couple of quarters at least. So right now, let's give a neutral rating when it comes to the return ratios. But let's talk about the shareholding. Promoters, it's Jammu Kashmir state government. They haven't changed, but the interest is in the FIs and DIs. That has also largely remained same, plus minus 1%. And remember, Mukul Agarwal, ace investor of Dalal Street has 1.5% stake in the company as well. So I'm going to give this a thumbs up as well for my shareholding analysis. But let's talk about, apart from shareholding, let's talk about the street cred, what's happening there. And largely, if you have entered in the stock, be it a medium-term, short-term trader, or even a long-term investor, all these cases you have made money, आपने पैसा हर जगह कमाया है. March lows, stock is up 50%. And look at that, for the last 5 years, the stock is up 4x. The story of growth is all across there. That means the stocks have already run up. Congratulations if you have position in this stock. And it's a strong thumbs up from my side as well. But if the stock goes up, the valuations don't become attractive. That's the basic maths. Look at that, the 12-month forward price to book ratio which we have taken, the current one stands at 1.1 times. The peak which we saw in 2024, that's around 1.4 times. But अगर पिछले 5 साल का average ले, तो वो 0.86 आता. So it's fairly a bit expensive on the other side. So current entry might not be very good for a long-term investor. So I've given this a neutral rating when it comes to the valuations. The last one, but the most important, is the outlook. What does the outlook suggest? The trend of Q1 operational numbers, we need to look at that. It shows a mixed trend. There's a good growth in deposits and advances, but CASA growth, there's a little bit of degrowth coming in. That's a question mark. Credit growth, it's largely in line with the system of how the markets are going, the profitability to sustain at healthy levels. That's what we'll try to understand. Management has stated this is a positive commentary coming from there. And also they have stated that they do not see any incremental stress forming in most of their categories. Of course, the ECL segment is something where even I am concerned for most of the banks, and the slippages, they are likely to remain range bound. So largely it's not a very good outlook, but it's a neutral outlook. So a neutral outlook deserves a neutral rating. But let's give you the entire picture of Jammu Kashmir Bank, how the ratings actually stand. Overall, we see the income statement, balance sheet, and the return ratios doing really well. Of course, this is actually your overall operational parameters, return ratios. Also, we'll look at it. Valuations, it's not that good because the stocks have run up, and that's why I've given this a strong thumbs up. Shareholding is pretty strong as well. But let me give you the entire picture of what's the total number looking like, and it is 6 out of 8 Jammu Kashmir Bank. It's on the higher side of the average which we give in our KYC show. But the conversation is not just till here. The conversation moves on, and we get the management to dissect the company, and we'll be joined later by Amitav Chatterjee. He's the MD and CEO of Jammu Kashmir Bank. An interesting snippet. He has more than 3 decades of experience. But wait, he already has leadership positions also, and these are really big names. He's the ex-deputy MD of SBI and the MD and CEO of SBI Cap as well. So he's a pretty interesting history he has. We are joined in by Amitav Chatterjee. He's the Managing Director and CEO at Jammu and Kashmir Bank. Good afternoon, Amitav sir. It's always a pleasure to have you with us at NDTV Profit. And now the Q1 earnings start. Your bank has given out a Q1 operational update. The advances were good. The deposits were good. A little bit of moderation in CASA. How does the overall Q1 operational numbers look like?
Very good afternoon, and to you and all your viewers. And thank you for having me here. In fact, the Q1 numbers, as you have already mentioned, in fact, I should first start by appreciating and complimenting you for the fantastic analysis that you did. I was watching it, and it was very nicely done. Thank you for that. The Q1 numbers obviously are pretty good. In fact, I don't remember the last time when this bank has had a first quarter numbers similar to this. Yes, I would start with the only blip that you mentioned, that is the CASA. Now, if you look at the volumes of CASA, the quantity of CASA has gone up almost by 7.5 points, basically 7.5 percentage points. But in percentage terms, the CASA ratio has gone down, essentially because we have had almost a 20%, more than 20% growth in the fixed deposits. Now, as you have already mentioned in your analysis, this is not something which is, exclusive to J&K Bank. It is the industry's phenomena at the moment. So getting deposits itself is something of a challenge for the entire banking industry. And I still believe that the CASA ratio remaining at 42%, and I believe the initiatives that we have taken in the since last quarter of the last financial year are paying off. And in the coming few months, I believe that we will be able to improve the CASA ratio as well. So that is how I would sum it up. Obviously, the advances have grown slightly more than the deposits. So that we will have to work on.
Right. Mr. Chatterjee, what will be the deposit growth? And I'm talking about the long-term perspective, when we compare deposit growth with CASA ratio. Going ahead, at least for your bank or the industry, what do you think will that be?
See, any bank will be happy to have a deposit growth of 12% plus going forward. I mean, it has been like that for quite some time now. I think more than 6-7 quarters, except for one quarter variation, that was the last quarter of last financial year, when almost all the banks had a pretty good deposit growth. The deposit growth, any bank which has a plus 12% growth will be happy. I must say that. But having said that, if you have to grow in advances, the deposit growth has to be more robust, I believe. So, in fact, all the banks are putting out all kinds of efforts to garner deposits, so including our bank. So we are trying our best. The best source, I believe, is to augment the float that every bank has. Instead of trying to go for long-term deposits, I think it is very important for us to augment and keep the floats going, because in the long run, as a developing economy, there will be pressures on deposits going to mutual funds and the capital markets as well. So overall, I believe as J&K Bank, we have an advantage. I must admit that we have an advantage that we have a very strong deposit franchisee in the state of Jammu and Kashmir, where we have very strong depositors who have been with the bank, very, very loyal to the bank. So that is an advantage we have over the other banks.
Right, Mr. Chatterjee, that's of course there. Just to get in for our viewers, almost 61% of your advances come from Jammu and Kashmir, and it's a very interesting bank, It's of course state-owned, state government-owned, and interestingly, you function like a proper private bank. It's a very interesting take. But I want to understand, sir, the non-Jammu Kashmir bank, the non-Jammu Kashmir segment. How are you expanding? You're already there in 18 states and 4 union territories. But I want to understand, which other places are you expanding, and also the book loan growth, in this non-Jammu Kashmir regions.
See, I would mention something for you to understand. Last year, we had a very difficult time in Jammu and Kashmir after the Pahalgam incident, and of course the flash floods and all that happened in the state. We had a real challenge in the business, in the tourism, horticulture. Everything was very badly affected. Yet we were able to have a decent growth last year. I mean, I believe we were one of the better performing banks in the financial year. So that was because we expanded our position in the rest of India. Now, I must say that we are fortunate to be present in 22 states and union territories. So we do not need to start afresh. We already are present there. We need to create a better brand. That is what we are now doing. Last year, the contribution was almost 50%. Last year's business contribution was more than 50% from rest of India. A major part of that was from the corporate book, I admit that. But what we are trying to do now this year is to expand our retail footprint in rest of India. So we have taken quite a few initiatives, like tying up with several DSAs, corporate bases, several initiatives that we have taken, and opening of branches as well in rest of India. So we are planning to increase our retail footprint in rest of India. Once we are able to match the retail growth in rest of India as that to the retail growth in Jammu and Kashmir, then I believe it will be a very stable position for the bank. So this is the aim going forward. And in the next 2 years, I believe we'll be opening not less than 50 to 70 branches in rest of India.
Okay, 50 to 70 retail branches, rest of India. That's an important take coming in from Jammu Kashmir Bank's management. But sir, I want to understand the NIMS guidance, how it pans out. The NIMS is something which everybody tracks in the banking sector. What's there for your company?
See, after the last year's repo cuts, everything has been passed on. So I believe going forward, the NIMs are going to improve definitely. And when I said that there is a lot of improvement in the business environment in Jammu and Kashmir, where our major retail advances come from, the return on the interest income, the net interest income is likely to improve. So I believe that going forward, the NIMs are going to improve. But having said that, you also understand as an industry, there is going to be a lot of pressure on the cost of deposits. If we are able to successfully take on the initiatives that we have taken in improving CASA, I believe 3.6 to 3.8 would be something which we will be able to maintain in the long run. And since retail has started growing in a good way, like personal segment, the agri segment, the MSME segment. So these segments they have better returns. So I believe that NIMs are going to go up from here on.
Exactly. So NIMs are expected to go up, and 3.6 to 3.8% is the range given by the management. But a little bit of concern is, of course, on the higher credit risks. How will your bank mitigate this?
See, at the moment, if you look at the trend of the NPAs, it has been going down steadily. And I mean, since the audits are not over, I am not in a position to give you the Q1 NPA numbers. But it is improving steadily every quarter. So that proves one thing, that there is no stress, inherent stress in the books. And wherever we have grown, the credit expansion that we have made in the last 1.5 years or 2 years or so, they have been either a very good retail, which is mostly under the MOU with the state government, or the agriculture, which has a very low NPA percentage in Jammu and Kashmir, or the corporate growth that we have had in only AA to AAA rated companies, where I believe that there is no possibility of any stress in the near future, at least, unless of course there is something happens to the entire sector or entire economy. So I strongly believe that the credit portfolio of the bank at the moment is very, very stable.
Fair enough. Credit portfolio of the bank is very, very stable. Thanks a lot, Amitabh sir, for taking out your time and talking about the industry and your bank's growth perspectives going ahead. It's always a pleasure to have you with us at NDTV Profit.
Thank you very much. Thank you.
Well, that's the management of Jammu Kashmir Bank, and we had already mentioned the turnaround story is playing out, and it seems like it might play out more ahead. Interesting perspective from the management, and for these interesting stories like that, keep watching KYC, and yes, stay tuned to NDTV Profit.
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
India Inc.'s most respected names chose India's best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here, and that itself speaks for the commitment towards highlighting the advantage which India is having. What I am looking for in this is that we should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी। ये आपके लिए।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300 300।
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. Late last week, there was an important notification that was sent out by the government through a gazetted notification. And this has to do with your contributions to the Employee Provident Fund and the rules that govern it. One of the headlines that must have caught your attention, of course, is the fact that you can now officially limit your contribution to the Employee Provident Fund to 1,800 rupees. But let's get into the details. And it's not just that change. There are also changes with regard to the withdrawal that you can get from the EPF, as well as how much, if at all, goes to what is called the Employee Pension Scheme. This is what your employer contributes on your behalf. We'll talk about all of that, and we'll talk about what you should do if you are indeed to limit your contribution to 1,800 rupees. Joining me today is Harsh Kumar of Zvest Financial Services. Thanks so much, Harsh, for taking the time for speaking to me. Let me first ask you what you made of that gazetted notification, because obviously the first headline is that you can now limit your contribution. But my understanding is that this already existed in the form of an interpretation. They've just made this clearer. We'll talk about that, and then we'll go into the liquidity and certain other things.
Right, Alex. Thank you so much for having me. And you rightly said that it's a clarification with respect to the 1,800 rupees. But, we have been giving all the attention to that part, ignoring what are the other aspects of this notification. So let me get things straight. This looks like any other EPF notification, but I think it's much bigger than that. It's actually the final piece of a much larger labor reform puzzle that began with the last year's new labor codes. Now, there's an extension of labor code that came into effect in November 2025, where we had 29 existing labor laws, which were consolidated into 4 labor codes. And you have discussed it enough on your channel as well. Now, one of the key outcomes of that was a very clear definition of wages, which was still at that point of time not very, very clear. Now, today, the definition says that 50% of an employee's CTC is classified as wages. Now, once we have the definition of wages with us, we need to work on what should be the PF contribution, because this is a part of that Social Security Code 2020. Now, before that, why is it that we are all discussing it so much? And the reason is that we have close to 7 to 8 crores active contributing members in EPF at this point of time, which means it's very, very important for a lot of people in the country. And that's the reason I think we should give it due attention. Now, let's look at the changes which have happened. First is on the PF contribution, which is getting a lot of media attention. Now, the new schemes make it very clear that the employees and the employers are required to contribute 12% up to a notified wage ceiling of rupees 15,000, which works out to be 1,800 rupees per month. Any contribution beyond this, both for employee and employer, is voluntary. For example, if your basic pay plus DNS announced, which is your wage, is 1 lakh a month, then earlier there was an ambiguity whether you should be paying 12,000, employees should be paying 12,000. Under the new rules, 1,800 becomes a number which you can work at. If you are looking at higher number, then it has to be a mutually agreed number between employee and employer. Now, another good thing which they have done is that this 15,000 wage ceiling is not hard-coded into the scheme. The notification refers that wage ceiling as notified by central government from time to time. So allowing it, that in case there is an inflation in future, which it would be, they can keep changing this number also. Second thing, the withdrawals have become much simpler. Now, if you go back in time, if you would invest into Provident Fund for 10 years, 15 years, and you needed money because of certain health contingencies, or you were buying a house and you needed to make payment for that, or your son or daughter gets admission into a good university and you need money for that, it was a very cumbersome process because there were multiple definitions associated with that. Now they have simplified it a lot. Now the number of withdrawal categories have been shrunk from 30 to just 3, which is essential needs like illness, education, marriage. Second is housing needs like purchasing a house, constructing a house, or repayment of loan. And third is special circumstances. Now, members can withdraw up to 100% of their eligible balance. So they have to keep 25% in the fund, and remaining eligible amount, they can withdraw up to 100%. And the minimum service criteria, which was earlier 5 to 7 years for different categories, has also been reduced to 12 months. Third is the liquidity has improved. Now, under the new rules, if you are withdrawing, you have to get under auto payment mechanism money within 3 days it can be extended up to 20 days. But if within 20 days you don't get the credit and there is no reason which is given to you as to why there is a delay, you get a penal interest of 12% on that, which is higher than 8.25% which you get in your provident fund. Fourth is the flexibility with respect to early retirees. So earlier the definition of retirement age was 58. Now, if you're retiring at any age after 55 years, you can withdraw 100% of your corpus. So in summary, if you ask me, the notification introduces a lot of flexibility, both in deciding between a higher take home, higher EPF contribution, and also in accessing one's retirement corpus. But the core still remains the same. The 12% contribution structure, UAN, tax treatment, interest mechanism, portability, everything else remains the same.
You know, I want to focus though, and I think understandably, Harsh, a lot of attention has gone to this 1800 contribution because it has implications on every month's take home, right? Because even if you look at your definition, if you're talking about your 12% of 1 lakh rupees, then you're talking about 12,000 rupees that would go from your end and another 12,000 rupees that your employer would contribute on your behalf. Now what would happen is if you limit to 1800 rupees, then effectively about 10,200 rupees multiplied by 2 would come to you. And of course, you're paying tax on the 12,000 that you contribute in the new tax regime. And you're not paying tax on what the employer is contributing. So net of tax, effectively, that 10,000 rupees that you contribute and 10,000 odd that your employer contributes can come to you in hand?
Yes. So let's understand this a little more holistically. So, when you are restricting your contribution to 1800, the first thing, like you mentioned, is you get a better take home. But from a tax perspective, we need to look at it from 3 different dimensions. First is new tax regime versus old tax regime. So under the old tax regime, the employee's EPF contribution also classifies for Section 80C, which is not there in new tax regime. Now, if I look at this, then, we may say that, there are a lot of people in India who may benefit out of this by paying their contribution on the higher side. But if I go by the last interview of CBTT chairman, I think this was in Feb or March, where he mentioned that 88% individuals have already moved to new tax regime. So there is not too much of a tax advantage there. Second is about the employer contribution. Now, employer contribution in EPF, NPS and superannuation up to a combined limit of 7.5 lakhs per year remains tax-free. So if you are below this threshold and your employer reduces its EPF contribution because of the new rule, now the key question is what happens to the money that is no longer being contributed? So if that amount being simply added to your salary, then definitely it becomes taxable. But on the other hand, if the employer is routing it via other instruments like NPS, etc., there are still benefits which can be accrued to that. Third is also about individuals' contribution. Now, there was a budgetary change which was done in 2021 budget, which said that if you are contributing as an employee 2.5 lakhs in a financial year in EPF, then the interest is tax-free. But if you're contributing more than that, then your interest becomes taxable. So it depends on where you stand in terms of the contribution that you are doing. If it is more than 2.5 lakhs, then, the taxability changes accordingly. So what is the bottom line? I mean, I won't say that 1800 is good or bad. The real impact depends on whether both the employee and employer, how do they decide to structure it going forward.
You mentioned NPS, and it's important to make that point because you said that from the employer's contribution, Harsh, up to 7.5 lakh rupees, EPF plus NPS plus superannuation. And here I'm guessing that this has to do with gratuity contributions. Is that what it means?
Yes, that's what I meant.
So that is 7.5 lakhs, right? So you can actually ask in the new tax regime for your EPF contribution to be brought down to 1800 rupees, hypothetically. And you can say that what you were contributing to the EPF or your employer, what they were contributing on your behalf to the EPF, you can actually make that contribution to the NPS instead, bring your contribution down to 1800. So to that extent, you're in hand. In our previous example, we were talking about 10,200 rupees. Then that per month is what your in hand goes up by. And that 12,000 rupees or minus 1,800, which is 10,200 rupees per month, can go into NPS instead, and you'd still not be paying tax on that 10,200, correct?
Right. So if we have to analyze the benefits of moving to NPS, I think that is what you are intending to go to, and let me take that. So first thing first, I would say that these are relatively different categories. So if I look at EPF, it is a pure play debt instrument, whereas NPS has a lot more variety. So I would say that both are complementary strategy. So what are the benefits? So first is, like I was alluding to, it is an asset allocation mix. So if you are doing NPS, you can take equities, you can take corporate bond, you can take government bond, and now they have a provision to add alternative assets also. So which means you are doing a much more holistic allocation of your retirement corpus rather than keeping it only in debt, which is the case with EPF. Second is a tax efficiency, which is available in new tax regime also. So if you look at new tax regime, what are the different options which are available to you to avoid taxes on certain heads? You don't have many options, but in NPS, you have that provision under Section 80 CCD, where an employee contribution to NPS up to the prescribed limit of 14% of basic salary and dearness allowance is eligible for tax benefit. Obviously, we have to keep in mind that 7.5 lakh number in kind, but the only clause here is that it has to be a corporate NPS structure. So as an individual, you don't have much play to do unless your corporate also is in sync with that and they have an NPS structure which you can use. So I would say that, if you have an option where you can move your money to NPS via your corporate and you're not breaching that 7.5 lakhs, I think it's a very, very good instrument to look at.
Very interesting. So therefore, and this is hypotheticals, right, that we're talking about. If you are in a slightly lower end of the tax-paying income, right? So if you're around that 12 lakh mark where you're not paying tax, then this might actually make sense for you to say that your in-hand goes up and your tax incidence does not change at all, right? Would that be fair?
So, yes. So this 12 lakhs tax-free can actually get extended to slightly more than 13 lakhs for somebody who's using this provision of NPS. So you don't have many other options, like I was saying, available in a new tax regime. But this NPS helps you increase it by another 1 lakh as far as your tax-free income is concerned.
But so even just not counting the NPS, and we'll talk about the pros and cons of each of these decisions, but if I were to say that you limit both my contribution and the employer's contribution to 1,800, then net of tax of what the employer's contribution would be, my take home would go up by that extent, right? To say that if I am in the highest tax bracket and I'm paying 30% tax, then the contribution that the employer was making, that would be taxed at 30%, but hypothetically, my in-hand would go up quite substantially. Would that be fair?
Yes. So, Alex, now what you do with that in hand decides how, your life, retirement goals and everything plays out.
Yeah.
Because if you look at intuitively, you are getting more money in your hand. And if you invest it wisely, it makes a lot of sense. But there is a lot of behavior element which gets involved. So I would not suggest somebody to only look at increasing the take-home salary. One has to look at one's individual profile and behavior before taking that decision. And I'll tell you an irony here. People who are in lower income slab, they want EPF contribution to be on the lower side. They want higher take-home. But if I look at ultra HNIs or HNIs, they actually still keep on contributing to voluntary, and they would keep on contributing because they see the benefits of this versus other conventional product. Even if the interest is taxable beyond 2.5 lakhs of their contribution, they still keep on contributing. So I think one has to look at it very holistically, depending on where individuals stand, what are individual behavioral pattern, and then take a call on that.
That's a fair point. You know what? We'll discuss this after a very quick break, Harsh. The various scenarios that could follow. One, of course, is keeping your money in the EPF, and the others, if you cap your EPF contribution to 1,800, what should you do with the surplus? Stay tuned for that. We'll be back on the other side to talk about it.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300
All right, welcome back. You're watching Your Money Matters, and we've been talking about the recent changes to the rules that govern your employee provident fund if you're a salaried employee. And we've discussed what all of those changes entail. Let's talk about the various options available to you as things stand. Harsh Kumar is in conversation with me. Harsh, the various options available. First, you keep it going as it has been going, which is you contribute the entire amount. What is the benefit and what is the negative aspect of this?
So Alex, let's look at what are the options available for any individual. Yeah. So one is you spend, second is you invest, or third is look at a combination of both of these. And my worst fear is that it should not be taken as a salary hike, because many investors or many individuals may assume this extra cash flow as a salary hike also, and they may, take a bigger loan, include more EMIs in their portfolio, which may be good for them in the short term, but may be harmful for them in the long term.
But before we do that, Harsh, I want to take it one by one. I will take you through the various options. I want to first discuss the option of not doing anything, of allowing your contribution to continue at 12% of the wage as it is described. What are the pros and cons of continuing to contribute to the EPF?
Right. So, Alex, first thing first, like we discussed, that 2.5 and 7.5 limit for individual and employer. But if you're continuing in EPF, one of the biggest advantage here is that you're getting a rate of interest, which is fairly significant. So we are looking at 8.25% rate of interest. Now, imagine you are earning 20 lakhs a year. Going by your marginal tax rate of 20% at that rate, this 8.25 is as good as 10.3% available to you in a fixed deposit, with slightly higher safety, I would say, because it's backed by Government of India, AAA rated instrument. So one thing is that, it's a very good instrument from a return point of view for somebody who's looking at fixed income as an allocation. Second is that it's a forced discipline on individual. Now, today, the problem is many young investors, they don't have the discipline of investing on a regular basis. And here, you don't see credit in your bank account. The money keeps on getting invested. And at some point, it becomes big corpus for you, which you don't even realize. Third thing is that here, you don't have a behavior gap playing against you. Now, let me take 1 minute to explain what is behavior gap. So the problem in most of the asset classes today is that there is a return which asset class generates. There is a return which investor makes, and there is a difference between that. So, for example, equities would have given 14% return in last, 5 years, for example. But individuals would not have made, because many of them would have done panic selling, many would have done, buying at higher level, and those kind of things keep on playing. Here, in case of EPF, you don't have those problems coming in because it's a long-term investment and forced upon you. You don't even want to break it because the avenues to break it earlier were very, very difficult. Like I mentioned, 5 to 7 years was a time period which was there for you to come out of it. So that's the reason I feel that it's a very, very strong asset allocation mechanism, which is disciplined, and it ensures that one is invested for long term.
Okay. What about the cons though? Because here you're talking about a situation where the rate is determined, of course, by on a yearly basis. It's at 8.25%, as you pointed out. It was allowed because 15% is going towards equity, right? At this juncture, it could be revised upwards down the line. And there has been certain conversation to that end. But most of this, as you pointed out, is in fixed income instruments. So there is a possibility that down the line, depending on the interest rate scenario in the market, you could have a lower than 8.25% rate, right?
Absolutely. So one of the negatives where I see is that it's not a holistic retirement product because the portfolio is skewed toward fixed income. And if you are in your 20s and 30s and you're looking at next 30 years of contribution to Provident Fund, there you are missing the opportunity of participating in the India growth story through equity. So that is one limitation. Second limitation is, which is not often discussed, the withdrawal in EPF is very, very cumbersome. I'll just give you the data point for 23-24 because we don't have the data points available after that for this particular thing which I'm discussing here. The rejections for EPF claims when individual filed for it was 26% in that financial year. And what were the reasons? KYC mismatch, bank details not updated, UAN compatibility being an issue. Now, for an individual who has worked hard, saved enough, and then he or she wants to redeem or withdraw the money, and you are in a situation where your claim is rejected, and then you have to go from pillar to post. In fact, there are people who have created business model around it where they say that you are not getting your EPF money, come to us, we will help you take that, which is not a desired situation. Ideally, the liquidity should be available for an individual. Third, I would say, is the flexibility. Let's say you are 30, 35. You want to do something in terms of your skill enhancement, other things. If you have a portfolio which is fairly liquid, you can take those kind of initiatives. You can upgrade your skill. You can move up the hierarchy in your corporate or outside that. Where in EPF, you have those limitations because there is a lot of friction required for you to take that money out, and these are some of the cons which are there for EPF.
Yeah. Okay. So if you're not doing a continuation of the EPF contribution, if you decide to cap it, what are your various options available? One is, of course, to increase your take home, and you've described why that's not necessarily the best idea for somebody who's really disciplined and who can make the right choices. Then they can invest. But what are the other options available in your opinion?
So first is NPS through your employer because it's a very, very good instrument. And why I say it's a very good instrument because A, the return is over a longer period of time could be better than that 8.25%. Second, it also has the taxation efficiency in terms of when you are withdrawing it. And thirdly, the expense ratio in this is very, very low. I mean, while we speak today, in case of NPS, the expense ratio ranges from 3 basis point to 9 basis point. Now, if I compare that with developed market, Vanguard runs an expense ratio of around 0.05 to 0.07% on its funds. If I look at iShare, which is again a very, very strong ETF provider, there the expense ratio is even higher. So we are having a product which is globally competitive with respect to expense ratio and in terms of developed market as well. Second option for you is you start contributing to PPF. But here I would not recommend that because on one hand, you are reducing the allocation in EPF and then you are adding to PPF. It's the same thing at the end of the day. So it looks like a little counterintuitive to me. Third is you start investing into mutual fund through SIPs. If you are a younger person and if you want to build a portfolio for long term, you can decide a combination of flexi cap fund, mid cap fund, large cap funds. You can put money into that. Fourth, which you can work upon is that you can also strengthen your emergency corpus. Because I've seen a lot of people who have money in EPF, but in short term, they run into issues like personal loans, BNPL, taking P2P loans. These kind of things can be avoided because one can get more liquidity and get a handle on emergency fund. And so I would say that, depending on where your age is, what profile you have, what your aspirations are, you can decide which option do you want to take.
And specifically on the NPS, there are quite a few changes that have been introduced, Harsh, to make it more viable as well, right? Including the flexibility when you're choosing what form of NPS you invest in. And also with regard to the withdrawal, they made it so that you can withdraw 80% as a lump sum as opposed to 60% earlier, right?
Right. So, Alex, we have discussed this 2 times earlier in this conversation. I will repeat it again for the benefit of the viewers. Is the tax efficiency at the time of investment. This is not available in any other instrument in new tax regime. So I would request all the viewers to look at it very seriously, which is up to 14% of your basic salary plus DNS allowance continues to enjoy tax benefit. And we discussed that 12 lakhs can become 13.1 or 13.2 lakhs in terms of being tax-free component for you. Second is flexibility at retirement, which you touched upon. So earlier you could withdraw 60%. Now they have increased it to 80%. But you should be careful about it that the tax-free withdrawal is still 60%. The incremental 20% that you're withdrawing is liquidity provider for you, but it's not tax efficient for you. So there, you have to take annuity for 20% to 40% of that. Third is the platform in itself has become much mature. Today, if I look at it, in 2016, they introduced the concept of adding alternate investment to that. Now, for a retail investor, taking exposure to alternate investment is not easy. And here you have somebody doing due diligence for you and giving you exposure in that at a smaller ticket size also. Second, the number of providers in this have increased. So while we speak, I think there are around 11 to 12 providers. So it's not that you are married to a single pension provider. You can choose with whatever you want to go. You can track their performances and you can do. Lastly, it has an option of auto choice versus active choice, which means you are an investor who doesn't understand the market dynamics. You are not sure about how much debt equity should be there in the portfolio or how should you change it over a period of your working life. You can choose auto choice, where as your age keeps on increasing, the portfolio keeps on becoming less and less aggressive. It's like a lifestyle fund, which even mutual funds are going to introduce, I think, in this year or next year. So I think these are the few benefits which have come up in NPS. I think it was started in 2003. And if I look at the current structure of NPS, it has undergone a tremendous change for the benefit of investor. And I would urge all the investors to look at this product also in a very, very conscious way.
So Harsh, here's my suggestion. There's a lot that we still have to talk about with regard to the NPS. We've, of course, done quite a bit to set the context. I think in a future episode, we can discuss the pros and cons of each of the options available under the NPS so that people can make an informed decision on that. Thank you so much, though, today for taking the time and for speaking to me.
Thank you so much, Alex. Thanks for your time.
All right. So if I were to wrap things up, well, there is a distinct advantage if you were to cap your investments into the EPF, particularly if you've already migrated to the new tax regime, because of the tax saving that you can take up if you were to migrate a portion of that contribution, that is your employer's contribution, to the national pension scheme. I hope that that is clear from the conversation that we've had, but if you've got questions for us, then you can write to us on any one of our social media platforms or in fact in the comment section, and we'll take it up in future episodes. Thanks so much for watching. This is NDTV Profit.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honor?
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300
Hi, thanks so much for tuning in to this special show. Several key developments have taken place in the recent past for the Adani Group that have effectively removed a number of headwinds, particularly emerging from the US. The latest of those was the settlement of the alleged bribery and securities fraud against the Adani Group and Gautam Adani. Now remember, this latest, what I was referring to, was the indictment unsealed in November 2024, where US prosecutors accused Gautam Adani, Sagar Adani and other executives of participating in a scheme involving alleged bribes to Indian officials and misleading US investors. The Department of Justice had described it as a case involving more than $250 million in promised bribes and billions of dollars raised from investors. But now, that very same Department of Justice wants the entire criminal case thrown out and not just dismissed with prejudice. From a legal standpoint, what that means is that the charges cannot be brought again. The DOJ's strong response comes after Judge Nicholas Garaufis last month questioned the DOJ's original dismissal of the request, calling it terse, bland and conclusory and demanding a fuller explanation. What followed, however, is a remarkable filing on the 4th of July, just a short while back, from the DOJ that not only defends its decision to drop the case, but also it launched a blistering critique of the prosecution itself. The filing addresses the judge on 3 grounds: that the allegations were legally flawed, the prosecution causes diplomatic strife, and third, that the prosecution is contrary to the Trump administration's enforcement priorities. Let's unpack this. On the legal issue, the DOJ says that the securities charges against Gautam Adani, Sagar Adani and Vineet Jain should have been dropped a year ago or never brought in the first place. These are quotes from their statement or their filing. It goes even further, describing them as failed FCPA claims that were spun into securities charges. Another key aspect of this is the issue of the US jurisdiction. The filing repeatedly argues that this was fundamentally an Indian matter. Let me just read you the quote from the DOJ filing, which speaks for itself. Quote, "This is a foreign case. The first 2 pages of the indictment tell the story. Several Indians, with maybe a European or 2, allegedly tried to bribe other Indians by paying the Indian government via complex Indian rebate programs to get Indian contracts to provide Indian electricity to Indians in India." Control F India in the indictment and it'll show well over 200 hits. The United States, pretending to be the world police, can cause diplomatic strife and also waste resources better spent on domestic concerns. India can better manage its internal systems than prosecutors in Brooklyn and Washington, unquote. Remember, all of that was a quote. But before we get into the details of what the DOJ has said, let's first understand the timeline of events that has brought us to this point. My colleague Nimit is standing by to give you just that. Nimit, this all starts quite a while back, doesn't it?
Yeah, it starts way back in 2024, like you said. If the timeline we look at, it started in about October 2024, where the grand jury indictment was filed under seal. Now, on November 20th, this indictment is unsealed for the whole world to see, and there was a bunch of different charges that were brought forth. Along with this, the SEC also initiated a parallel civil enforcement case. Now, this means a bunch of different US prosecutors started going after Nadi. Now, the next year in 2025 was spent by Adani and Gautam Adani and Sagar Adani in defending these challenges to jurisdictions. They said that there was no real case here, it was an Indian case, and denied all allegations. Then the SEC in Jan 2026 sought India's assistance in serving summons on the Adani Group and Gautam Adani. But what followed there was when the matter really turned. India's investigation in early 2026 reported that there was no actionable misconduct on the part of the Adani Group or any of the other people people mentioned there. Now in April 2026, this is where the turn of this matter started. The Adanis moved first to dismiss the SEC case, which was a civil enforcement case. Along with this, in May 2026, the Department of Justice itself, like Alex just said, moved to dismiss the criminal indictment on its own. Now in May 2026, also the SEC, which was moved earlier, settled the case with the Gautam and Sagar Aghani for an amount, and that case was closed there. Then Judge Garofis ruled on the Department of Justice's plea to close the case and demanded detailed dismissal explanation. Now the DOJ on July 4th, which we just discussed, filed an extraordinary 10-page defense of its dismissal, saying that the Adani Group actually did not commit any wrong here, and this was a wrong investigation and need not have started to begin with. Now the next step here is the July 13th date, where the judge is to decide whether to grant this dismissal order.
That's where we stand right now. In fact, my colleagues, including Nimit, had conversations with several leading experts in the realm of law, and here's some of what they had to say.
DOJ's response was strong. I don't think it's that unusual in these circumstances that the Department of Justice tries to provide clarity so that the judge understands the basis for it, particularly when there have been unfair allegations of partial treatment and that sort of thing. And so I thought it was an appropriate response. And now the judge's responsibility is clear. I mean, let's face it, the only possible decision here is dismissal. So that's clearly still the finish line here. The United States subjected one of its allies to 2 years of global scrutiny, where there were zero investor losses, where the Indian agencies that are fully capable of looking into, in an ethical way, looking into alleged misconduct, found no misconduct. And there's clear case law in the United States that American courts and American justice should not be pursuing foreign transgression, real or perceived. So to me, this was more jurisdictional theater than it was a serious criminal case. And I hope that this stands as a lesson and a reminder that American courts are courts of limited jurisdiction. Generally, it's the conduct happened here, people were hurt here who are American citizens, or there is some aspect of terrorism where there is the possibility of it coming to the United States. So other than those three general things, we should be respecting the entire world criminal justice system, particularly those of our allies.
I think that when one steps back and analyzes what's happened, one has to understand that first, the department is taking an important step of dismissing an indictment, which no administration does lightly. And in that context, the court has properly asked for an explanation. And I think the most important thing is DOJ has provided a fairly detailed explanation of multiple reasons why they believe that it is in the public interest to dismiss this indictment, both legal reasons, policy reasons, procedural reasons, and they've laid that all out. Now, there is another debate in the United States about the role of courts in dismissing indictments, because unlike other matters, the role of the courts is limited in these matters. And the department, even though it has given a substantive response, staked out its position, not only for this case, but for others, that there should be real limits on what the court's discretion is and the inquiry that the court should make here to determine whether or not dismissal is appropriate.
Fantastic. And we're also joined by a US legal expert now who's going to explain to us the repercussions of this DOJ filing, what it means for the case itself. Benjamin Giamforti, a partner at Bullmuth, Meher and Deutsch. Thank you for joining us, Benjamin. My first question to you is, originally the judge had said that the response was too short and didn't really give sufficient explanation. I want to understand, with this response that the DOJ has provided, does this suffice the legal requirement that the judge asked for in terms of a longer and more reasonable response?
So from my perspective, the additional detail that the Department of Justice has shared with the court should be sufficient to satisfy the court that this is being dismissed for an appropriate reason under the rule that we were just talking about. It does provide additional detail on challenges that the case has from a legal perspective, challenges that the case has from an evidentiary perspective. So, I don't know what this judge will do, but given how limited the role is of the court here, I would imagine that this will suffice for the court's reasons.
Perfect, right? So, and now you say that it should suffice. So, where does the court go from here? You've also said that the court has a limited role to play now, with the DOJ clearly deciding to end this case. So, where does the court go from here in light of the DOJ's strong response and backing its decision to drop all charges in this Adani case?
Yeah, I mean, it's a little hard to predict because judges can kind of do whatever they want. Given how limited the role is here and how thorough the explanation was in the letter, I would expect that this would be enough for the court to satisfy itself that this case can be dismissed. But Judge Karofis, he's got lifetime appointment. He can kind of do whatever he wants, and we'll see how it unfolds from here.
Okay, all right. So that's an important conversation. Thank you so much for joining us and explaining that to us. Let's take this forward, though. We're joined today by Amit Desai, who's of course a senior advocate at Bombay High Court. We've got Swapnil Kothari, who's senior lawyer at the Supreme Court. We've got Vijay Chopra, who's managing director and chief executive officer of Enoch Ventures, and Parag Thakkar, head fund manager at Fort Capital. Gentlemen, thanks so much for taking the time. Let me start with you, Mr. Desai, because this is the latest development in a series of events, and one might say that the DOJ's response was pretty stark. They haven't minced their words. What do you make of it?
I don't find that response to be very stark as you tried to suggest, because the role of the court in a matter of this type is very limited. We have a similar provision even into the Indian law and under the old section 321 of the Criminal Procedure Code, which is now 360 of the new BNSS. And the procedure is more or less the same. The scope of the judicial review by a court which is examining a request by the prosecuting agency to withdraw the prosecution is extremely limited. And all that I think the DOJ has tried to do is to ask the court to stay within the remit of the judicial review that the court can undertake. And from what I've read here, it seems to be very similar to what we have in India. The remit of the court is very, very limited. The scope of judicial review is not to sit in judgment over the decision of the DOJ or the prosecuting authority, but only to ensure that there is no extraneous factor that is weighed in taking the decision not mala fide, the decision not arbitrary, etc. So all that they essentially try to do is to do that. So when you look at what the DOJ has presented to the court, it prima facie seems to suggest that it's trying to restrict the court's jurisdiction to the limits of its judicial review and nothing more. And in that context, they have tried to explain as to the process that they have followed internally in order to arrive at their decision to dismiss the case. So that's the sense I have. And we have a lot of body of law in India, which is very, very similar to what seems to be happening in the US by the DOJ.
Thank you, Mr. Desai, and that I think explains the situation really well, that this is not something out of the ordinary specifically, and the DOJ is just telling the judge that you need to stick to your constitutional mandate while we stick to ours. Mr. Kothari, I'd like to come to you next. Now, one of the clearest findings in the DOJ filing here is that this case should have been dropped a year ago and maybe not even bought at all, which is a very strong statement to make. What sort of weightage does this kind of a statement have on a judge's opinion, where Mr. Desai has also said that the limited role of the judge, as well as our US experts said that the role of the judge is really limited, and when the DOJ is saying that the case need not have been brought at all, what does that say as to the merit of this case at all and to the judge's decision going forward?
What it says is that clearly that this case was absolutely worthless. It should not have been brought in the first place. There was no legal merit in it. There was no evidence, concrete, even prima facie evidence to suggest that there was any wrongdoing by the Adani Group. And even if there were, even if we were to remotely stretch it to there were, the US courts have no jurisdiction. It is the Indian courts are sufficiently capable, and the Indian prosecuting agencies are absolutely capable of doing their job. And we as the world police should not be policing the courts worldwide and try to bring in within our ambit something which has got no relevance to us in any manner whatsoever. So the fact is that it's an indirect jibe also at the Biden administration, which seemed to have initiated during whose regime this case was initiated, and there was a lot of anti-India rant at that time. So obviously, without saying it very clearly, what the DOJ is trying to do is it's trying to correct its own steps and try to say in some form or the other to any other prosecuting agency within the United States that we have to tread carefully when it comes to any international conglomerates or any even international small-time individuals who want to do business in the United States, so that we don't catch them unawares and bring false, frivolous cases against them. So basically what the United States is doing is trying to own up to some of its own overreach and trying to say that, we should not, rather we should be driving our motor car within our own lane and not cross the line, and try to ensure that, people who want to do business with the greatest democracy, as we've just celebrated 250 years just a day before yesterday, then we should remain so. And we should give a strong message that international conglomerates should be able to do and should do business with us without any fear or favor or without any such, apprehension in their mind that there is going to be some sort of an extraneous viewpoint or a repercussion that's going to come across, even if you are doing business with us very, very cleanly. So basically, the judge has very limited role, as most of the experts prior to me have said. And I don't think any judge, even if howsoever enthusiastic he or she may be, is going to, bypass what the prosecuting agency has said and say that, no, I still find something. So with a limited scope to say that, okay, this all seems to be perfect and all fine, and there doesn't seem to be any, extraneous reason behind why the DOJ is suddenly coming out very strongly in its defense in a 10-page defense. Absent that, I think it should just clearly say, fine, DOJ, you are right, and put an end to this once and for all, and Adani would be as free from this nonsense that it had gone through for the past 2 years.
Absolutely, and the larger point I think you make is very relevant to our audience as well, that consistency and clarity and consistency as well as clarity itself are both really important, and how consistently they apply this law becomes as important as well. Mr. Desai, to dig a little deeper into this case now, there are 2 points on merits that were made in the DOJ filing itself. One was, of course, that this is clearly an India case and not really a US case. The second point was, of course, that there was no harm to investors that was done at all, which is again a very serious and important point made. What do you make of these findings on the merits that the DOJ has responded to?
Considering the way in which the criminal law works, normally, and I would say this because I think the US has recognized the problems that they're facing in the world. And if you sort of go back in time to sometime in February of 2025, when the US government issued an executive order and paused all FCPI investigations which were going on. And if you go back to the notification that came out in that executive order, it recognized what Swapnil just mentioned. It said that it's an over-expansive and unpredictable jurisdiction, and therefore American citizens and businesses are also being impacted across the world. And therefore, they, at that point of time, recognizing the problems that these expansive FCPA investigations have across the world, they paused all those investigations. They recognize the problems that they're facing across the world when they carry out these kind of investigations, where there's hardly any overt act which is taking place within the US soil. And normally a criminal matter is investigated within the territory where the overt act takes place, not only where there's supposed to be a perceived loss. Now, and that's because the evidence in relation to that crime is only in that particular jurisdiction. So having recognized that way back and having now taken this step, they've realized that they do not have the evidence, nor do they have the ability to collect the evidence, if any, in relation to this particular matter, and therefore they are dropping this case. So that's clearly the correct approach that is to be undertaken. Of course, so far as India is concerned, India can decide whether it wants to go into the matter or not go into the matter, but that's an entirely different matter so far as India is concerned. Coming back to the other issue raised, I can tell you that from the day when this indictment came out, I had also come on your channel and made a statement to say that I did not find the indictment to make out a criminal case against the Adanis. And therefore, right from the inception, and I think there was many an opinion even under Indian law, that that particular indictment did not make out any kind of an allegation of an offense that had been committed in that indictment. So what we are seeing here was that an indictment that should not have been filed is now being being sought to be withdrawn. I also see some references that very detailed factual presentations apparently have been made to the DOJ afterwards to convince and satisfy the DOJ that there is in fact no crime that has been committed. And I think it's based on that the DOJ has obviously therefore now taken this view and come before the American court to say that let's drop this prosecution. So I think therefore there is something to be said even on the merits. Of course, in law, India has a jurisdiction if it so chooses. But if we want to go by what the lawyers of Adani have presented to the DOJ, and I think the DOJ has gone into it in some great detail, there may not be any material at all to initiate any inquiries or investigations.
Got it. Okay. So from the market perspective, and gentlemen, Vijay Chopra as well as Parag Thakkar, apologies for keeping you waiting, but it is important to present to our viewers what the latest development in this case has been. First to Vijay Chopra, just a quick view. The fact is that a QIP has gone through for Adani Enterprises. The kind of institutional interest has been significant. What do you think investors are looking at when they look at the group right now? Would you say that they think that the group has now put all of these legal challenges behind them?
Case has been an overhang few years now. We've been had off and on instances where certain agencies came up with allegations on Adani, and we saw that the stock cracked almost 50%. And that agency is no more even existent. So we are talking about a company which has a combined market cap of close to 20 lakh crores, a combined revenue of close to 3 lakh crores, a combined EBITDA of close to 1 lakh crores. And this is a behemoth in itself, and a company which is into various businesses, quite diversified, from ports to airports to transmission to renewables to cement to city gas distribution to mining, and many more businesses in the offing. Adani is also dabbling into defense and various. They have Adani Future Labs where they're working on technology. So, and they are coming up with hospitals. So a well diversified group in India. So I think that when we look at from the investor point of view, and especially those investors who are quite wary of any court cases or any kind of controversies on any company. So these conservative people now would become quite open to invest in company. And I'm talking about not only retail and HNIs. I'm also talking about institutional investors and overseas investors. So we saw what kind of response was there in the QIP. But if a company is growing at such a scorching pace, it needs capital, and capital is definitely provided by the investors. Maybe they are institutional investors or HNIs or whatever. So it is a good news altogether, and this overhang would go. In the longer run, I believe that Adani should keep on growing. Their strength is execution. Many companies have come and gone, but the way Adanis have executed in the last 6-7 years, and they've become such a huge company. I think that it is a good news altogether.
Well put. In fact, I just want to pull some graphics on to the screen before I go to Mr. Parag Thakkar for a closing comment. Quite a few of these stocks have actually bounced back very handsomely from their 2026 lows. In the year itself, you have Adani Energy Solutions, it's up over 100%. You have Enterprises, that's up as much as 83%. Green Energy, that's up about 106% or thereabouts. Ports and SEZ, which is a Nifty 50 company along with Enterprises, is up as much as 46%. Adani Power is up 72%. This is the traditional power business. Adani Total Gas, about 57% or thereabouts. The question though, Mr. Parag Thakkar, is if you look at this group and if you look at the various entities that they have, the businesses that they have, it's hard assets. But given the kind of run-up, and you keep a very close eye on valuations as well, what do you have to say about the best prospects that an investor should look at with regard to the group?
No, I would say that, see, in spite of whatever overhang was there, we saw continuously good investors coming into the group because as Mr. Vijay Chopra highlighted, the group was growing at a scorching pace. And as an equity market investor, you need those kind of investments in your portfolio, especially talking about assets like Adani Ports, which I have been very vocal about since the stock price was around 1200. That is a huge strategic asset. handling 500 million tons of cargo and generating 20,000 crore kind of free cash flow, operating cash flow, not free cash flow. So I would say that this is I would say, as you rightly said, the assets are huge, strategic. They need investments. And I think even prior to this, whatever has happened, and DOJ has taken a firm stance in favor of Adani Group now, that's an Indian thing, and Indians will handle it well. And second, it has not caused any loss of capital to US bondholders also. Those were the two key things, right?
Yeah.
So I would say that it's a great thing for India to have some groups like this who can expand at such a rapid pace.
Yes.
Only thing is that I would say that you have to be prudent while growing, and so your net debt to EBITDA remains should be under control, and then you can keep growing. And this is just a feather in the cap.
Absolutely. All right. On that note, gentlemen, Mr. Amit Desai, Mr. Swapnil Kothari, Mr. Vijay Chopra, as well as Mr. Parag Thakkar, thank you so much for joining us this afternoon and for taking the time. And with that, from Nimit and myself and the team that put the show together, thank you so much for watching. Stay tuned. Lots more on the other side of this very short break. This is NDTV Profit.
Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury, and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
The hottest trends.
the smartest brand moves on our new show.
But wait, what do we call it?
After one of the driest starts to the monsoon season in years, with India recording its 5th driest June since 1901, well, there's finally some relief. Monsoon has finally picked up across the country, as you can see, narrowing the deficit from 40% earlier to about 27% now. But while this July monsoon relief has really offered hope, the risks are far from over. With Kharif sowing delayed, reservoirs below last year's levels, and the El Nino concerns still looming large, well, the question tonight is, can this revival sustain? More importantly, what will it really mean for food inflation, rural demand, water reservoirs, as well as the broader economy? That's the big question we are addressing tonight. And to take this particular bit forward, and it's an important discussion because when we talk about water and the reserves that it builds over the next 1 year, it is required for a lot of developmental activities. To take forward this particular stellar panel tonight is going to add to the might on the expertise of where we lie when it comes to Indian monsoons and its impact on the economy as well as the water reserves. Anshuman Director, who's the Water Resources Division Head at TERI, Amit Agarwal, the President of Techno Digital, Gaura Sengupta, Chief Economist of IDFC First Bank, and Bimal D. Shah, the MD of SML Limited. Thank you so much, ladies and gentlemen, for joining us tonight on this big development. When we talk about the monsoon for this particular year, Anshuman, first coming to you, of course, there was a very big concern, but over this weekend, the kind of monsoon rains and the God-sent showers that we have seen, that has really given some relief to the country. Of course, not to forget the devastation also that has really taken place. At the current moment, with this kind of a data and the rainfall amount, where are we stacked now? How much lower than the last year? And also, how are our reservoirs really filling in?
Sure. Thank you for having me first. See, as you have already mentioned, when we started this year, around June, the deficits were quite significant, around 38-39%. However, the rains have come and the southwest monsoon has come across and has started moving towards the mainland. And I think that has had an impact, and I think the current deficit has reduced. Although it is still there, we are around 27% or so. That said, I think we still are, if you look into the reservoir inflows, the data that CWC has shared, as on 2nd July, the major around 166 reservoir, we still have around 26% of deficit as compared, around 39% of deficit as compared to the last year. And we are around 26% of the total capacity, roughly around 47 BCM, 47.7. So the deficit is there, although it is being reduced. And if you look into the entire overall scenario, the overall prediction had been by IMD of around 94-90% of the long period average as far as the rainfall is concerned. So we will have a below normal rainfall. There will be challenges, therefore, to all the sectors. And we still have to see how El Nino responds. It is building up, as you all know. And possibly over a period of time, it will have its own impact, although not that much because it will be having its impact towards the end of July and September. That's when it's expected to be peaking, even a bit further. So during the main monsoon period, it will have some impact. But let's see. Hopefully, we'll have not tremendous impact, in terms of the overall water availability. So that's the general scenario as far as water availability and the rainfall deficit is concerned. If you look into the latest data of, also the IMD, the one that predicts for this particular week from 1 to, around this particular month, from 1/6 to around 1/7 until the July 1st. We had a significant deficit, in almost all the, regions of the country. East or northeast, we had around -40%, and northwest around 30%. And likewise, it's distributed. So all the major areas have seen the deficits. Although there are pockets of, heavy rainfalls and flooding areas as well, and spells of drought in some locations. But overall, if you look into the scenario, as I said, we will have below normal rainfall. That's what is predicted.
All right. Below normal is now written down, but of course, we are probably narrowing the gap of how much lower. And probably that is also giving relief. In fact, the market also reacted positively today. Bimal Disha, of course, even if rainfall really compensates, but agriculture requires a certain amount of rainfall at a certain time. In terms of Kharif sowing and the agricultural produce basis, the below normal monsoon, as well as the timing and intensity that we are seeing right now, how are you seeing this overall ecosystem, and how much of a concern will it be for the rest of the year?
Thank you for giving me time to participate. First of all, I would say that, as mentioned earlier, of course, June seemed like a very big deficit, as mentioned, around 39-40% deficit. And hence, there was a lot of delay in sowing, and particularly certain particular crops like OSR, pulses, rice, which is a major crop for India. And a lot of these crops are very much dependent on the rain. However, coming in July, we do see that there is monsoon everywhere, around 95%. There is a little bit relief, but the point is, again, how it to be there, where the water needs to be there. Is it there in time for the crop, for the farmers to sow in the right time? The government is doing a lot to tell farmers where the rain is getting delayed to sow late. So then there is no issue in future, Otherwise, what happens is the farmers tend to get a much shorter window and a much compressed timeline to sow the seeds and then get the yield they want. Of course, as an organization, we work a lot in agriculture, especially in crop protection and crop nutrition. But all these crops are dependent on rain and monsoon. We, of course, try to give solutions that give the farmers independent ways to grow the crop even more robust and more stronger, with all these effects that are coming in place. But of course, nature has its own ways of handling things. And yes, coming into the whole El Nino point, that there are some days or months when there is a lot of rain, and then there is suddenly there is heat. So because of the whole change and the dry spells and the extreme weathers, this is also damaging the crops at the stage when the maturity of the crops start to come. Or sometimes there is a rain in the wrong time, or there is no rain in the time when they need it. So let's hope July is not dry and is wet enough, or there is enough rain, again, in the related areas, especially the rain-fed crops, or where the farmers are depending on the natural rain, and where reservoirs or irrigation-based agriculture is lesser.
Right. Thanks for stating that. And of course, most of the predictions do point to now rainfall being good and intense, at least in the month of July, and probably the deficit will not be that much. Gaurav Sengupta, of course, we have spoken at length with the upcoming issues and concerns because of El Nino. Some of the experts during the day also mentioned that El Nino could be offset by other factors and its impact could reduce, and now the water levels are also rising. How do you foresee, from the economic standpoint, this bit of positive development really coming in from the part of monsoons?
I think much needed relief after a very weak start in June. As you mentioned, the deficit was 40% in June. It's now reduced significantly to 24%. But still, more rainfall is required because still a majority part of the country, if you see by area, is receiving deficient rainfall. And because of the weak start in June, area under sowing as of, I think, June 26th, at the latest data that is available for Kharif, is tracking below last year by around 20-22%. So we do need rainfall activity to pick up in July. Usually July, August are the most important months from a sowing perspective because 80% of your sowing gets completed by July, August. So we've seen in the past you can have a very weak June, you can have a very weak September, but the critical months tend to be July and August, and that tends to impact the Kharif output. From a macroeconomic, from a inflation perspective, we've seen in the past, for example, last time India had a super El Nino, it was in FY16. Actually, in FY16, we had back-to-back a large rainfall deficit. FY15, FY16, both were almost 12% rainfall deficit. El Nino was in FY16. We saw a slowdown in food inflation because global conditions were supportive. Crude oil prices were lower. Global food prices were lower. This time, we've got another relief, which has been the fuel inflation is coming lower. So fertilizer cost should now ease off, which had spiked during the escalation in West Asia. So that is another bit of relief. But yes, I mean, it's not necessary that weakness in monsoon will result in a pickup in food inflation, but it does add to upside risks. In terms of growth impact, what we have noticed during years where you see a large monsoon deficit, agriculture GVA does get impacted. At least 50% of agriculture GVA is from crops, and the rest is from allied activities. But over the years, the linkage between monsoon and agri GVA has become lower because the share of allied activities within agriculture has been rising steadily. So it's not necessary for inflation to pick up, but there could be a dampening impact on the agriculture GVA side.
All right, a very important point mentioned there. Anshuman, when we look at the water reserves as well and the reservoirs filling in fact, till Friday, whatever rain had happened, even though we were celebrating the relief, but at least the reservoirs were still dry. Over the weekend and with the heavy rainfall today, and I'm talking about Mumbai in particular, where the crisis was a little more critical. How are you seeing the rain really feeding into the reservoirs? And even though it's below normal, how are we going to stack up? Because water is now becoming extremely essential, even for AI-led transition of the country, which is so important.
As I said, the monsoon directly impact the reservoirs, and reservoirs are a dynamic, kind of resource, I would say. We do have a deficit because of the deficit of the rainfall, as we had seen in June. So as I told earlier, that the month of June had seen around 26% of the reservoir capacity, which is as of now filled. So we have a large deficit. But I believe as the monsoons are, catching up, we'll have these reservoirs increasing their capacities, and therefore there will be more water available. That said, we will still, see how the overall impact happens of the deficit that we are seeing of the monsoon overall, and therefore how much we will be able to recover in terms of the reservoir inflows. And that will, to a large extent, define whether, we'll be able to totally eliminate the deficit or possibly reduce to a large extent. So my feeling is we'll be able to reduce to a large extent, although the deficit would still remain. We have mentioned about not only the kind of deficit we are seeing as of now, but also the El Nino impact. And by the way, also El Nino just not is the factor, Indian dipole, ocean dipole, which also, affects the neutrality of the, El Nino. At this stage is neutral, so we're not able to have a counter suppression of the rain caused by El Nino. So all in all, we will see some impact. However, as we move towards the end of the monsoon season, we should see larger, more reservoir capacity. In terms of impact, we have discussed already. I think we'll see a direct impact on our groundwater resources, on our capacities to produce already mentioned, crops, as well as many other environmental flows, hydropower, etc. So all of these are closely linked, and I believe we'll have to plan a bit better, although the government is already looking into prioritized districts in terms of the focus area, which are likely to be impacted. There's already a plan having been discussed by the ministry. So we expect that they will support. There's a lot of activities and preparedness that is going on already, and that's in place. However, as we have seen in the past, that remains a challenge. How much implementation happens on ground?
All right. So many measures are at play. Bimal Shah also said the same thing. So Bimal, at the moment, while we already know that we are going to be below normal, expectation was a much worse monsoon, but probably it is really recouping a large part of that, dryness. But at the particular moment, are you already seeing concerns? And rural economy is, the backbone of our overall economy. Their consumption is just so critical. What are you gauging from the ground when it comes to the monsoon-led economic churn?
So as I mentioned that we are into rural marketing with our crop protection and crop nutrition products. So we reach out to more than 10 or 15 lakh farmers and distribute to 16, 20,000 dealers. Right now, there is a little bit of concern in the sense, should we buy product now? The rain is going to get delayed more. So there is a little hold up, and they find it, maybe some areas are finding it a risk. Maybe do we stock up now? Do we buy for the coming month? And there is a lot of hold, But as we are seeing now that 90% of the country is covered in rain, now only thing we hope that how this stays continuous and it's balanced. Too much rain also is a problem, and there are damages in the crop. And already the farmers and the network is already impacted due to the war effect of the increase in costs in whether you say any plastic or even fertilizers, as you say, particularly even a product like sulfur, which we deal with, which is a very important product. And that, along with monsoon impacting, can have a double effect. So now we're only hoping that how these rains continue in the way they should, in the right place, in the right time. Of course, there will be certain areas based on this whole El Nino effect, which may have larger concerns. We are guessing them to be maybe in the areas of Karnataka, Marathwada, and Vidarbha, as what we analyze. But I think we are also being well prepared as an industry, agriculture input industry, to face these issues and work on solutions for our farmers, for them still giving them the right yield and the right output with our package of practices, where even water usage can be lessened, but the products can still be used and make your crop grow and give you a good yield.
All right. So that's an important, input coming in, Bimal. But at the present moment, with whatever sense you have of the ground and the areas worst affected, which are the crops? Do we have some visibility which could be seeing a shortfall where a contingency is really required by the country?
Well, what we are thinking at least is that this oilseed rape, rice, some of the maize areas where there is maize being sown, and pulses. These are some areas we see if in the related states, if there is a deficit of monsoon, there will be a concern for delayed sowing or lesser yield or lesser hectares being seeded,
Right. So these are the crops which could really see, and these are some of the important crops, pulses for a largely vegetarian country, and they are on the higher side of the pricing. Very important source of protein. Rice is a staple food. So some of those concerns needs to be actually thought through in advance. Gaura, at the current moment, with the data that you are picking in, what has been the damage already caused by below normal monsoon?
Right now, from a growth perspective, we are not seeing too much of an impact. Rural is still quite strong. You can see that in two-wheeler sales, tractor sales, it's still holding up. Even you look at NREGA data, the demand for employment under the scheme is still declining, which is a good sign usually. So for now, we have not seen the impact. The impact should come if, let's say, the monsoon, if there is a negative impact on the Kharif output, then the impact will come in the harvest season. So right now in Q1, we are not seeing that much of a negative impact. Rural demand is still holding up. There is also the fact that as I mentioned, that allied activities over the years, the share of allied activities has picked up in agriculture GVAs. There's also a diversification of sources of income for rural households. It's not just crop, but it's also, let's say, construction activity, etc., which is supplementing rural demands. You've also got the state government income schemes. For example, majority states have a certain type of targeted income scheme, which is also supporting rural income. So for now, the growth indicators are not showing any negative impact. We are seeing some impact on the sowing perspective. We've got some data till June 26. There is a decline in sowing for rice, coarse cereals, and pulses. On inflation front, we are seeing very limited pickup in perishables, but we are not seeing a spike really. So in fact, thanks to the fall in crude oil prices, we actually see downside risk to our estimate of a 4.9 inflation for the year FY27. Plus, if let's say the pickup in food inflation is not as pronounced as feared, then we can see actual downside risk to our estimate. So for now, on the inflation front, prices are still well behaved. We are not yet seeing the impact on the rural consumption.
All right. So at the moment, of course, we are also in between period of rejoicing the lower crude oil prices, that inflation really coming down. And on the other hand, probably expecting that monsoon will be much better than what we expected. Amit Agarwal, the president of Techno Digital, joins in now. Amit, good to have you on NDTV Profit. We had been trying to reach you. So my first question, data centers have become the lifeline of the AI transition of the country. And looking at that, water is a critical element in the data centers functioning. How do you see the current monsoon concerns really impacting the data center and at least foreseeing in terms of the water availability for data center space?
Yeah, thanks. And so communication error because of rains. I was supposed to come back from Pune to Mumbai and I'm stuck. So that is also one aspect of the rain we need to see. However, right now we are very crucial stage. Worldwide, we are seeing that there is a large-scale adoption of AI. There are a lot of model training that is happening, and India right now is a very sweet spot to get these models being in India. Because of the infrastructure availability, because of the availability of power. India is one of the countries where almost 50% generation of power is renewable. So all those aspects are
right. So Amit there on the line, we'll repatch with him. But at the current moment, Anshuman, looking at the present data that we have seen and the way the monsoon predictions are for this entire season, now what is the final outlook that is building up and what are the factors on your radar which could really spoil the party and the recovery that we are already seeing?
Sorry, I lost you for a brief while. Can you repeat?
Yes, outlook for the entire monsoon season in terms of the data that we are getting and the factors that may spoil the party on your radar.
Sure. Before that, can I quickly respond to what you asked for the data centers? We have been coming out with the paper recently, and we've looked into the entire thing. I'll very quickly mention that the data centers require significant amount of water for cooling systems, and therefore they will have a direct impact where especially the paucity of water will be there. So I think data centers need to plan much ahead in terms of the process efficiency. So I'll just stop at there. There's less data which is available on the water consumption itself, and at TEDI we are coming out with that publication along with our partners. So I'll come back to you on the data on that aspect later. And in terms of the overall outlook, as you mentioned, yes. I think as I said earlier, we do have a sort of recovery on the water resources as we see the monsoon catching up. However, as I said earlier, we have to be cautiously, optimistic about the whole scenario. We'll have active monsoon phases, and it will provide relief in places. But the overall season, I'm afraid we can still expect some, below normal rainfall. So we will need to focus on efficient water management and contingency planning, which is required. And I think that applies to agriculture, food, rural water demand, hydropower, and all the most vulnerable sectors that we have seen and talked about as of.
Right, Anshuman. So, of course, below normal for sure, El Nino impact yet to see, but still that concern is receding. And also, Gaura, this is the outlook right now coming in much better than what we earlier expected, but still not out of the woods. And Bimal also added on the kind of crops which can see deficiency because of the data that we are getting on monsoons. Putting both together, what could be the overall impact on the economy with the data points and the estimate of the entire monsoon season that we are seeing? And we have very little time, so quickly, please.
Sure. So we are actually quite positive. Yes, agriculture is very important, but its share has been reducing over the years. With the fall in crude oil prices, I think we see upside risk to our GDP forecast of 6.8 because you will see a margin expansion for the manufacturing and services sector in the remaining of FY27. So that will really help company performance. So for now, we could see full year growth closer to 7% if this fall in crude oil prices sustain.
All right.
There will be some dampness definitely for the agriculture GV if the monsoon does not pick up.
All right. So, but overall, it's a reasonably okay and a good picture when it comes to the economy from what we earlier started. Amit, Gaura, as well as Bimal, thank you so much for joining us and putting in your inputs. And of course, rain gods have really blessed us this time. Let's just hope for the best for this particular year in monsoons. Thank you so much for joining us on The Big Question. With that, it's a wrap.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पीमार्क मस्टर्ड ऑयल में ही खाना बनाती थी। ये आपके लिए।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do script?
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300
Good evening, you're watching Market Express with me, Shreyansi Singh, and this is the show that's going to get you a lowdown in terms of everything that has happened in today's trading session. But let's get straight into the show and start chatting about markets as well, because you do have Indian equity benchmarks that ended the session near the day's high, with the Nifty in fact closing above the 24,400 mark, very much so, firmly above that mark as well. And when you talk about Sensex as well,